Hello everyone, welcome back. Hello everyone, welcome back. Welcome back everyone. So sorry about that, my break from YouTube. I took a bit of a break because I've been going through some school right now. So I'm still being a student right now. Last week I just had my reading week. So I took a bit of a week off and decided to do nothing. And that was pretty great. And so lately I've been trying my best just to get through school and learn as much as possible. And I've been doing okay with that. So currently right now I've been missing my Bond only series. I also promised I would upload soon. So I decided to do that today because I have a little bit of extra free time. So I'm thinking about streaming for maybe 3 hours at most and then try to grow our bond portfolio this episode. So this episode we have cash and cash equivalents of 5 million. So last episode we had a ton of cash come in. So we're doing pretty well when it comes to our bond management because over the last 2 episodes we grew our money from 100,000 to about where it is right now at 6.8 million. And so right now I've been applying a bit of like the corporate bond. I've been doing a bunch of strategies. Bond ladder, which is probably my favorite for like short term, just because I like the spread around my interest rate risk. So when it comes to that, I'm a big fan of spread around my interest rate risk because if you're buying a long duration bond, for example, like a very long duration bond, they're very sensitive to prices. Whereas with my strategy of laddering, I buy a little bit of everything. That way, whenever rates go up, my bond portfolio doesn't really get hurt all that much because I have a bond mature next year, the year after, etc. So that's why I'm a big fan of the bond laddering strategy. And in real life, just recently, I actually sold out of a bit of my preferred Series K shares. So I have a little bit more cash in my personal portfolio just because I wanted to have a little bit more cash in my actual portfolio in real life. So right now I'm sitting at about 5.5% cash as of right now. But I am heavily invested. I'm heavily invested basically in stocks. I had a bunch of preferred shares, but I realized one of the biggest errors I had when it came to my personal portfolio. I also been working on a sheet. So I've been seriously working on this sheet for a while. And I'm going to show it off for a little bit. So like this has nothing to do with the game, but this is just my personal finances. So I should go into a quick disclaimer. Where is it? OBS. Why is it? Oh, okay. Okay, I'll just show it off right here. So, so none of these things I talk about in this live stream should be taken as financial advice. It's only entertainment purposes only. And yeah. So please do your own research before you buy because I'm 20 right now, so I'm not that super duper smart when it comes to investments. I am quite smart, but I'm not an expert. So you should really try your best to make sure that your investment decisions yourself are great ideas and not just buy because I say buy or do this because I say that do this. I would probably simulate it by doing a bit of paper trade where you want to just open up an account and just mess around with strategies and everything and research yourself before you buy. Okay. So here's my personal portfolio update. So I've been working on a new Google Sheet just because I wanted to start fresh and brand new. So what my main objective with this Google Sheet personally is try to make it not as complicated as it was. Because my Google Sheet that I had prior was a big mess, and so I decided to start fresh and brand new. So we have like my summary. This is my favorite part, and so my main portfolio, I'm sitting at $900 in dividend income and interest income. Tiny bit of it comes from interest, but most of it is dividend income. I have a bit of income from these, so I'm mostly a dividend investor. So in real life, I'm not much of a bond guy just because bonds right now don't have me interested because I'm part of me thinking that inflation is going to go crazy or at least slightly crazy. So I'm not a big fan of buying at least long duration bonds right now. So in real life, I don't want my bond portfolio to get wrecked. So right now, I'm mainly just sticking to dividend stocks, a little bit of preferred shares, but mainly just dividend companies. So I have like that much money I make about a year. And my returns and losses aren't that bad this year. It's been a great year for stocks. But honestly, it's, I don't know, I've just been trying to increase my strategies and try to become better at investing. And as of right now, my main portfolio, I was at like 1% cash, but just recently I sold some preferred shares. So I'll go into that. So right now, this is like my main portfolio, where it's my TFSA. So basically, the great thing about the TFSA in Canada is that if you contribute money to this account, your after-tax contributions, like whatever you make after tax, can go in this account, and you can get $6,000 a year in limit. And basically, I've been doing this since 2019, so I have about 18,000 contributed. It says 19,000, but a bunch of those are coming from dividends. And so I contribute 18,000 to this account, and I basically just been trying my best to just do well in it. Another stock I feel like buying is XDV. The only problem I can see is that 56% of the holdings were in financials. But if you look at my actual real life portfolio, you can see that I don't have a lot of financials. The only financials I have is Industrial Alliance. So I really am lacking financials. So I'm thinking about personally with my personal finances, buying up some XDV. Because it's like this fund, it pays monthly. So if I go over to XDV stock, it's like an iShares fund. And it seems pretty nice. Another one I was thinking about buying with, I think it's XPS stock. Oh no, it's XSP, my bad. I keep forgetting. Because I just recently bought a XPS laptop, so I get confused between the two of them. But this is one I'm also thinking about buying too, is XPS, where XSP, my bad, where basically it's the top 500 companies in America, and it's Canadian hedged. So the great thing about this fund will be I get exposure to the American market with Canadian dollars, so I can buy this fund and I'll have exposure to US. And I'm a big fan of also this fund. Why I want to pick XDV? Well, it has a higher dividend yield. If you look at the so the dividend on this, the yield on this is about 1% from XSP, which is the S&P 500. That's not a bad yield. But if I look over here, and I just do Control V yield, you can see that the distribution yield is 4.14%. So basically, I'm going to be making about 4% on my money. And if you're curious about how much is 4%, well, if you put $100 in, is that correct? Yep. So you make about $4.14 a year off of $100. So it's not a bad idea. And the great thing about this fund, it pays monthly. So my main objective right now is if I go over the progress of my finances, I made this look nice and pretty too. So you can see that like over the months, I have like a lot of peaks and valleys. So my main objective is going to be trying to make my peaks and valleys a lot less bad, because I either make a lot a month or I make like barely anything. Like this my most recent month, $14 and $14 for August, for example, but I made like, it's a little bit hard to see but I made this look pretty nice. I like this. This is probably my favorite graph of them all. So like I'm a big fan of like looking at like my progress. So like you can see that my progress is doing pretty well. So I've been doing it for a while. And so I recently sold out of the preferred share. I keep ranting. But right here, the Series K, I think this thing resets in 2024. And I used to own like 92 shares of it, but I sold a bunch at like around $22 a share. And I made a ton of money in cash. I just wanted to bring up my cash position to at least 5%. That way, whenever there's a market correction, if there is one, there may never be one. But my main objective is using this cash towards buying up whatever deals I see come up. And I'm not going to hold this cash for too long, just because personally, I don't like to keep a lot of cash, because if you keep a lot of cash, that literally destroys your performance, especially if inflation's a big deal. So like, I personally want a bit of cash right now, just in case if there is a market correction in the next coming months. But worst case there isn't, I'll just pick my funds for January. So I find that pretty interesting. Right now, I feel like a good option will be maybe buying up restaurant brands, because right now they are very, very low in price, and they're doing pretty well. Like, they're not doing very well, actually, price-wise. But I can lower my cost basis by buying up some shares in QSR. And also, over the last few months, another portfolio update is Suncor Energy. So this company just doubled their dividend recently. So like, if I just Google it, for example. For example, they just doubled their dividend, so which I found is very, very interesting. So like, part of me was reconsidering my investment idea of buying Suncor. But I'm very, very glad I've been buying a lot of Suncor. Like, a few months ago, I think I trimmed my TransAlta stake by about $500, and I put that right into Suncor. And I'm pretty glad I did that, because as of right now, I made about $226. I don't know why it's red. I got to fix the conditional format. But I made some good money off Suncor so far. And my main objective is going to be, once I get like a lot in gains, like maybe if it goes into the 40s, I might trim, or I might just keep this stock forever, because I'm still pretty bullish about Suncor. It's funny because in early 2020 I hated this stock. I was like, I'm not going to buy any more of this. And then 2021 I bought a little bit of it because I heard the vaccines work out, and I was thinking, good cyclical play, because when the economy returns back to normal, oil will likely return back to normal. But right now we're in a hyperinflation environment. Not hyperinflation, but just heavy inflation environment, where we have shortages of a bunch of things. And so commodities right now are ridiculously high, where I think you can get oil for like $80 a barrel, and Suncor makes a profit below 40 a barrel. And then they're actually able to sustain their dividend and do really well. So like, that's why most of my money is in Suncor, just because I personally believe it's a great long-term play. I was thinking more of a mid-term to long-term play, but I realized that one thing I found is very, very interesting is Suncor has sustainability. I was looking at this and I'm like, okay, this makes me feel like a lot more comfortable, because this company's actually caring about sustainability. Where is it? I was looking for like climate change, governance. Huh. So like, this is one of my favorites right here that I could pick out of them. And they're also investing in like hydrogen and wind, which I found is very, very interesting. So like, they're investing in other things besides oil, which I like. So like, basically, this is one of the biggest reasons why I like Suncor, because they're actually going into a bit of the future where EVs will be a big thing. I don't know if they accept Tesla chargers, but like, it's at least they're making change. And so Petro-Canada is going to be pretty interesting for Suncor over the next coming years. But the biggest reason why I like Suncor right now, they just doubled their dividend. And I'm thinking they're going to continue buying back shares and reducing their debt. Because a while ago, they said they were going to put 2/3 of their free cash flow towards buying back debt, and then 1/3 towards just buying up shares of their own company. So personally, sometimes you want to go for companies that are hated, because a lot of the times that's actually where the true value is. So I personally, in my personal opinion, I see that what the oil companies are doing is exactly the same as tobacco companies, because tobacco companies, nobody wanted to invest in the tobacco company because they were hit by like a lot of regulation, a lot of everything, and the business was dying. But like, tobacco's still here today. I'm thinking it's almost going to be the same for oil. And also, I was taught, like, over the summer, I did a value investing course, and I learned a bit about economics, or like a bit of, I just found it interesting, basically. Nobody wanted to invest in the tobacco business, So basically, these companies had a monopoly over the industry because there were no new market entrants. And so with that, I thought oil companies are kind of similar. So I don't know. Hopefully, it plays out the same as tobacco did, because tobacco, they're making tons of free cash flow, and they're able to pay out tons of dividends to shareholders. And I think I see the same for Suncor, in my personal opinion. I may be wrong. That's why I'm not betting everything on Suncor. Like, it takes up 17% of my portfolio, which is high. And then if I look over here at my conviction picks, I recently had about, I think, 10% or 11% of my money in fixed income when it came to, like, the Fortis Series K and Fortis G. But I realized that altogether, my total of my entire portfolio was about 30% in Fortis. And so that's something that, like, not a professional would do, because 30% of one stock is pretty heavily exposed to Fortis. So that's why I sold my preferred shares. But yeah, Suncor is definitely one of my biggest conviction picks I'm at right now. And I watched a video. I really liked the video. It's actually it's privated by Joseph Carlson. If you contribute to his Patreon, he has a video where he overviews a book called Richer, Wiser, and Happier. I personally really like that book. I haven't read it, but I heard him give a bit of a summary about it. And he said I liked it because, like, basically he said that instead of actually going out there and picking individual stocks that you don't understand as much, so, like, for example, if I go over my portfolio and just select a random security, for example, we could pick Restaurant Brands International. I don't know the restaurant industry all that well, so it makes sense for me just to buy an ETF that trades restaurant stocks, because they're going to be a lot more better at it than I am, because they understand the industry. Whereas when it comes to me personally, I should be invested in maybe only financial stocks, because personally I'm trying to get my CFP. I realize it's a lot harder than... I realized it was a lot harder than I thought. So I should just be focusing on those. But I'm going to be doing more ETFs in the future. That way I can just make tons of cash flow from those ETFs, get a monthly payout, and be able to compound my wealth a lot quicker. So my apologies for the rant. That's what live streams are for, in my opinion. It's ranting. So we start around 17 minutes. Write down 18 minutes. Cool. And I'm listening to some music right now. It's copyrighted on my computer, on my phone right now. So, like, that's why I got earbuds on, because I usually just like to listen to my own music. Some Foo Fighters in here, not bad. So we got some cash and some stock portfolio, and we got some corporate bonds. So now we're gonna resume to our bond only challenge. So as you can see right here, we have a bit of some blue chip fixed income, and we have some high yield bonds in our portfolio, which is nice. The high yield bonds are basically there for a decent dividend yield, but the reason why I don't want to have a lot of money in this bond ETF, like the high yield junk bonds, because it's highly likely the companies might go bankrupt. So hence I'm not going to be buying as much of that. Also don't like ETFs in this game because you lose control over what you can buy, but still they're pretty nice to have, because like this money I make, these dividends are not bad. And so like it's like kind of like AFK money. I don't have to do anything to make money off these. But right now most of my money is in cash right now, and that goes into a bit of the bond that I earned Strat. But before I go into that, I found this interesting. Where is it? Liar up. Is this it? That's pretty interesting, but not what I wanted. Nope. come I'm having trouble finding this bond ETF? It's like a bond ladder ETF. There we go, it's iShares. I thought it was Vanguard for a second, that's my bad. So here we go. So we got my good old friend right here. This is something I was actually thinking about putting my preferred shares into. So I made about $1,200. Some of that's being my principal, some of it being dividends earned, some of it being capital gains. And so I was thinking about buying a 1 to 5 year laddered ETF. Oh, this is for corporate bonds. Oh. I swear there was also one that you can get for government bonds. Haha! There we go. So I found these two very, very interesting just because I was going through it and I was thinking, holy shoot, I can relate to this stuff when it comes to like the game. So what I found is very, very interesting is you can go in and get into a 1 to 5 year laddered ETF. So instead of doing the strategies that I do in this game, so like whenever I'm playing Speculator and I'm doing a bond ladder strategy, I'll look for a 2021 bond, for example, for this year. I'll look for a 2022, which is next year, 2023, 2024, 2025. And I would have to do that constantly with this strategy, but in real life, you don't have to do that. You can just simply buy an ETF that does it for you. And so like this is relatively low cost. And a lot of the times you need a lot of money in order for it to scale when it comes to a bond ETF, because I think the minimum purchase of a bond is about $1,000. So sometimes in order to make a very well diversified bond portfolio, I've heard in my course that it's around $100,000 to make a well diversified one. I say at minimum $10,000, but you're not going to have a lot of holdings. So if one of those companies go bankrupt, you're going to lose a lot. But you're still going to be pretty well diversified. But like you can see like that, this has been relatively safe. Like ever since 2009, you would have made like about $4,000. So like that's not a bad return, but you can make a lot more off stocks. But like this is going to be a relatively safe investment for you. Relatively safe. It's not risk proof. So according to the fund, they rate this as low risk. So like this is a bond ladder and ETF that does corporate bonds. So the dividend yield should be higher. So if you look at the yield, it's going to give you about 2.47%. And so if you look at the yield for this bond, it's 1.91. But like this, they're both low risk. But if you want a less risky one, it will be the government one, because it's very, very unlikely the government's going to go bankrupt. While as corporations, they go bankrupt almost any time. But the companies that they hold are relatively sound. Like, you can see that there are Royal Bank of Canada, Toronto Dominion, Bank of Montreal, a lot of the big banks. So it's very, very likely that they're going to pay you back. So if it was one or the other, I would personally go for the corporate one, because it pays a much higher coupon. But you're not going to make much off this ETF. It's more of a short-term investment kind of thing. Like, you want to hold it for maybe... I'd say maybe 1 to 5 years. But like if you're looking for 5 years plus, I would go into stocks, because personally I'm not a big fan of bonds, but this bond ladder thing can help you with shorter term goals. Same with other things, like you can buy a short term bond ETF. You can just buy like a short term bond ETF, for example, or anything. But like I just found this cool because I can relate to this. So, sorry about the rants. So, technically the video starts at 24 minutes. So, I don't know what to do for this episode, because I didn't really come too prepared, but I just wanted to play some bond games today. Wanted to play a little bit. Okay, so there we go. Got 2 stocks. Got some bonds that might be maturing soon. So it's 2043. So you can see right here that current day is 2041. So like this matures in about 2 years, so it's relatively short term coupons. And then we got like this relatively long coupon one. So like this one's gonna be very, very price sensitive, but we don't have a lot of money in it. I think we're only gonna keep it for income. And so right now you can see that we're currently going through a bit of some cycles where they hit around 8% interest and then they fall. So it looks like we're in a bit of a rise in interest rate environment, or at least we might be going into that eventually. But then again, the government could always change their mind and decide to lower interest rates. And if they lower interest rates, I'm going to sell this long-term bond, make a decent profit. But as of right now, I'm probably only going to do bond laddering because I would say that interest rates are mid-level right now. Around 8, I usually lock into long-term. But right now, I think this is called bond immunization. So like you just want to kind of yeah, so what I'm trying to do with this game is I'm trying to minimize the interest rate risk. So if I were to go out there, for example, at all-time low interest rates, like let's just say over here, and I were to lock in long term, if rates go up, that would hurt the value of my bond. So right now I'm trying my best to like avoid paying in my portfolio. So like, I'm trying to use like the immunization strategy or laddering strategy. I always get confused between immunization and laddering because both of them, in my opinion, are quite similar. Because laddering, you're kind of offsetting interest rate risk by a lot, and immunization is kind of similar. So let's go ahead and hit the play button. Oh, what speed are we at? We are at 95. It's probably too fast. Let's do 90. So right now, oh, I should get speculator. Okay, pause. I said pause. Probably misclicked it. That looks okay. And then put my camera on. Nice. So today what we're going to be doing is we're just going to do a mix of strategies. I'm thinking about going long duration once it starts hitting 8%, and then reinvesting the coupons back into more and more long duration coupons. But if rates stay around mid-level, I might just keep cash, or I might invest in some bond laddering. That way I can offset my risk and still make a bit of money while we wait for rates to rise. So right now I'm going to start looking for a bit of a shorter term duration bond. And this is where I like to have my notepad out, because I like to tell myself what year I'm buying these bonds at. That way I can keep somewhat of a mental reminder of where things are at. So the current year is 2041. So that's very, very critical to know because it says right up there. But if we go over the research, for example, and recall database, and then select our has corporate bonds, has bond issues, and we can look at all these different bonds right here. Yep, that was good. So you can see that I can buy any bond out there, really, under the sun. And triple A's are like your safest, but like they can still go bankrupt. And the cool thing about Wall Street Radar that I really, really like is that it starts from like the least year to the most year. For example, like this would be 2044, or it'll be like 2042, and then way down below it will be very, very long duration, like 2050s. But in this game, it's a little bit different, where it starts AAA, and if you scroll down, you go all the way down to double B. So I personally prefer like the other way, where it's like it does it by year, like where it will be mixed by year. But that's just my personal preference. So right now I'm thinking about buying a triple B, because like those are still considered investment grade and they do give out good coupons. But I'm thinking about doing a bond laddering. So 2048, that will be alongside of our ladder. We're just going to design the runs right now. So 2044, 2042. So I can probably buy a little bit of this, just for an example of what a bond ladder would work. Because people might be like, what the heck is a bond ladder? So we can see right here, let's just say for example we have $100,000 to spend, and we look at like the, oh damn, this is expensive bond. What's the yield is probably not very good on that bond, because the price is like $130 or something silly. Consumer, this one, consumer electric, like this one looks much better, just because like the thing with bonds are at 100, if it says the coupon's like $4, it yields 4%. But if the price goes up a little bit, you would have to do basically your income, which is like $4, divide that by 110, for example. So for example, if I just do 4 divided by 110, it's about a 3% coupon. It's like that's a 3% yield, but still pays a 4% coupon. But because you're paying more for the bond, the yield is off. So like that's why I really like to buy discount bonds in this game, or at least sometimes I like to buy discount bonds. 2043. I lost that bond. Here, I can probably just get it up. Yeah, right here. If I go over here, bond, buy 2042. There we go. This is the bond I wanted. So you can see right here, it's a triple B bond, so it's relatively safe. But if the company continues to deteriorate, like if their sales go down, or they have more debts that they cannot pay back, this company might get downgraded to double B, and that's considered junk. So if it's considered junk, I might want to still keep it, but a lot of people like to sell out whenever it hits junk, because it's considered much more riskier. But if we look over here, if I have a $100,000 budget, for example, I divide by the ask, which is 998. It says 99.8, but bonds are priced. It's weird. Bonds are priced in like hundreds of dollars, but they're actually thousands of dollars to buy. So in this case, we're going to be buying about 102 of these bonds. 100, my bad. So if we buy 100 of them, we have basically the price of $100,000 face value. So at the end of the day, once this matures, which is I think 20, 40, whatever, we're going to be getting our principal back, which is my face value that I'm contributing. So we're going to get 100 back, but we're also going to receive a little bit of coupons. And because I think we're buying this bond for a discount, we're going to get some capital gains, I believe, which is going to be great. So we just bought a bunch of their bonds. We had to pay $1,000 accrued interest, which I don't really understand a lot much, but accrued interest is basically the person prior to owning that bond, they owned that bond, and they like basically the interest accrues over time, and then if they decide to sell it before getting paid, you have to pay them whatever time it is. For example, bonds usually pay every 6 months, so they pay twice a year. So this investor maybe hold this bond for 4 months, and we have to pay them 4 months of interest, and then we're going to get the extra 2 months. So I don't know whether you recoup your accrued interest or not, but that's the whole concept of accrued interest. You're basically... So right now we have a bond portfolio, and we have some... So consumer electronics, 2042. So we'll buy a 2043, a 2044, a 2020, 2045, etc. And we'll be good. So we're looking for 2043. Yeah, this ladder strategy takes a little bit more time, which is annoying, I guess, but it's okay. So Dutch capital, you can see that like right now, if you go way above, you can see that the coupon is that, and then the yield to maturity is if you continuously reinvest into it, and then if it matures, that's how much yield you'll receive. So if we look over here, you can see that this bond is priced at 97, and the coupon is $6 off 100, or it'd be $60 off 1,000, and we're gonna be making about 7.5% yield on this thing. So that's pretty nice. And you can see that the price that's just because the price is lower. But if we look at a bond, for example, that's a very, very high price, you can see that it yields 10.5%, and it gives a 10.5% coupon. but because you're paying more for the bond, it's giving you a less yield. And these higher coupon bonds, they're less resistant. Like, they're less, they get hurt a lot less with interest rate increases because they have such a high coupon with them. While as lower coupon bonds are much more volatile. If they're at the same credit rating. That being at 2043 standard. I lost that bond. It's like Dutch. Yeah, Dutch Capital. 2043, 7%. So let's go and buy like 100,000 of that, and then I'll buy a 20. So you can see that's at 97. So we just do 100K divided by 975, and we're going to buy 102 of these. And if we do 102, you can see that it's about 99,785. So we're doing okay. And so now we have our bonds. We have our Dutch Capital bond, we have our Consumer Electronics bond, and we have our Allied. So like right now, we're more towards 2-year bonds, which are going to mature in about 2 years. So these are relatively short term. So the great thing about this strategy is that when I'm doing bond layering, is I like basically right now at 2042, this one's going to mature. And then the 2042, I could roll into a 2044, etc. And so relatively, I have like very, very low interest rate risk because every year something matures, and I'm able to reinvest that into a longer duration bond or another short-term duration bond. So I really like the flexibility. And while if you're buying like a long duration bond, you can still sell it, but you might have to sell it for less than it's worth. Like for example. No, I haven't lost money off this bond, so it's not going to be that good to explain. So I'm hoping that interest rates do go up over the long period, because right now we're at 5%. Government is inverted. I don't see inversion. I see that currently the short bond is paying almost as much as the long, but inverted will be like the short bond pays more than the long. So I'm thinking that maybe rates are going to go up because they're so close together. And we receive dividends. So like these dividends I'm getting, they're legit in this game because I'm trying to do bonds only. But I own some ETFs that pay dividends. So like right here, these two funds right here, they're ETFs, but like they're exposed to bonds. So that's why I'm allowing me to own these two stocks. And I think I can own more stocks. Like if I go over here to industrial growth rates and then go to ETFs, for example, and go over the funds, I can buy these. I can buy the prudent government securities, which I'll probably buy next. And then I'll have prudent government securities, blue chip fixed income, and I'll have the high yield one. So I feel like those three are the ones that I'm allowing in the series. I'm also allowing convertible bonds, but I'm probably not going to buy much convertible bonds because I technically count those as cheating because you can get access to equity. Like you can basically buy a debt that has conversion to equity. And so I'm not going to buy those very much because I see that kind of as cheating in this series. But I've done a little bit of that. But I'm not trying to expose myself too much to that. But over the long term, I might make a lot of money if I do the convertibles. That's definitely one thing I regretted, is I never really invested in convertible bonds like last series. So I feel like I'm just going to completely restate my, I'm going to basically try out some convertibles just for a bit of fun. So it's currently 2041, so I'm looking for like a, so we could buy some Abbott Labs bonds, but like you can look at that, the price of the bond is $148. And it gives 0% yield to maturity. So like this bond is not going to make us any money. Oh, actually probably likely lose us money. Unless Abbott Labs continues to go up in price. If the stock continues to go up in price, like if we look at the chart, for example, stock chart. So you can see that like, if we would have bought over here, that would have been a pretty good convertible bond buy because the prices went up. And if the prices continue going up, this bond purchase will be worth it. But I'm thinking if it corrects, we just paid $140 for a bond, and once it matures, we're gonna be getting 100 back. So we're gonna lose a lot of money if we buy this bond. So that's why I usually like to buy around 110 and below, because you actually have a lot more room for error. Like for example, this bond right here, Nestle Inc. That might be a pretty good one. Or even Hansen Natural, because you can look at this. This has about 4% coupon, and I'm just gonna mess around with this. So like, because this is a convertible bond, I usually care in this game. I care a little bit more about the financials, but like you still should care about the financials about the bonds you buy. But in this game, to cut down on the bond ladder process, I don't look into the financials. But because I'm going to be buying a bond with the potential to get equity in the future, I extra care about the financials, if you know what I mean. So we can see right here, Hansen is about to make 41 cents a share in earnings. The management is reasonably competent, which is pretty good, I think. I think it's very capable is the best. So I think that's one or two levels above is very capable. Matures in 2044. So like this is a relatively long-term bond, but like it's only 3 years out. So like I would consider that short-term, not long-term. So like this would be a very good bond to add to our Laren strategy, but it just doesn't have a good coupon. Like the coupon isn't bad; it's about 4%. But the other bonds we bought that were just straight bonds, they had a much better coupon, if you know what I mean. That's because we have the potential to cash in for equity about 3 years. So you can see that this company has about $500 million in cash. 408 of that is tied up in working capital. So working capital being like the company's accounts receivable, that's what AR stands for, and inventory. So that's all tied up. They can't use that right now. And they have a ton of business assets, and they have a bank loan, and they have some convertible bonds. So like if you look at like the bank, so like this company, total assets $8 billion, total liabilities 900. You do the total assets subtracted by the total liabilities, you get equity or the net worth of the business. So this business is not what like I would call insolvent. If the company had negative net worth, or if the net worth was zero, it would be considered insolvent. And if they have trouble paying their bills, it would also be considered insolvent. Insolvent companies can still survive, but their chances are relatively low because everything has to go right in their way. Insolvent companies usually lead to bankrupt companies. So like as an example, I might later on look at a junk bond company and then show you how much equity they have as a comparison. So this company is currently at $36 a share, double the book value, a little bit over double the book value. It's valued at $18 billion, and they've been growing their earnings by quite a lot. Hoping that's going to be in the future. The price to earnings ratio. So like this is like a bit more of a value stock thing. But the price to earnings is basically how much you're paying for the company's earnings. So as of right now, with them earning $1.24, and the company being worth $36, you would just simply do the price of the company divided by the earnings. So if you do, for example, 36.21 and then divide that by the earnings of the company, which is $1.24 so far, you get about 29 PE. But I'm also assuming that they're doing the 41 cents. So that's probably where we got the... So we just do $1.60 something divided by 36.21, about, oh no, it's price to earnings, price, yeah, so, oh no, 36.21, sorry about that, I'm failing at my math today. There you go. So like it's about that. So I'm thinking the trailing earnings is also included the potential for 40 extra cents. But right now this company is quite heavily expensive. Like I usually prefer the PE to be below 15, but it's above 25. It's at 25, which is quite high. But if this company is going to continue returning, if this company is going to continue making more and more every year, this will be worth it because I'm paying 25 times earnings. If the company can continue grow in their earnings, this company might be a great stock buy. The PE is pretty great for now. We got the dividend yield 1.55. Keep in mind, if we were to go out there and buy the common shares of this company, we have the potential to lose a lot of money on the stock, and we're only going to make 1.55% dividend. So if the dividend was maybe 5 or 6, I would consider buying the common shares in real life or in this game. But because the dividend yield is much lower than the coupon of the bond, in my opinion, it makes more sense to buy the convertible bond because it limits your potential for loss, and it's both are kind of the same. You're buying common shares of a business. The business could become worth a little bit less or a little bit more, but with the convertible bond, you're buying equity and a bond. So that's usually my rationale, is that I love convertible bonds because you have the option to convert, and you also have the safety of a bond. So that's why I like it, because you get the potential for growth from the stock, and you also get the potential to protect your gains and also make higher income. So with this strategy, it's pretty nice. So that's why I usually like buying convertibles. As you can see, they don't have a lot of debt. The debt to equity is 12 cents for every dollar they own. So this company is not very, very highly leveraged. So it's very, very unlikely they're going to go bankrupt. Return on equity is quite bad, though. They're not very good at producing values to shareholders. At least this year. It might become better. But we're going to buy some Hanson Natural bonds just for a little bit of extra fun. And I'm going to probably double it just because I want to see if this bond becomes worth a lot more. Let's just do 100K as a comparison. Stick it with 100K. Okay. 100K. Currently priced at 981. So we're going to buy 102 of these bonds. And the total purchase price is 100,387 plus accrued interest of 300. Not bad. So you can see right here, we have our portfolio. Most of it's in cash, but we have a little bit more in laddered. And so now we're quite laddered. So you can look at, we have a 2042, which matures about 1 year. We have a 2043, which matures in 2 years. And we got a Hanson Natural Convertible, which matures in 3 years. So, I would say we're semi-well laddered, because we're laddered for about 3 years out. So over the next 3 years, if interest rates rise, I'm going to be able to lock in. So, we're going to do okay, I think, with this strat. But the thing is, we didn't really put too much money in. So I'm hoping that interest rates rise fast. That way I'm able to put this $5 million to work. I usually like going through a lot of strategy and theory. I try my best to explain it. Okay, so I'm going to fill. So we can see Hanson Natural. Oh, I also forgot to talk about the most important thing about a convertible bond. My bad. So look over here. Current is AA for the company. That's their credit rating. Conversion into Hans shares at 52 a share. So if we look at the current price, it's at $36 a share. So we have to go up to at least 52 in order to make money off this bond. In order to make capital gains. So if it goes above 52 a share, we make a profit off these bonds. But if they stay at 36, we're going to be able to get 100% of our money back, plus a little bit extra. Because I bought it at around, I think, $96 per bond. It's at 96 right now. So because we're buying below 100, we're still going to make money off this bond. And plus, our coupons should be nice, too. But, it's going to be very, very, very nice if this company goes above 52 a share. Because then after that, we're going to make capital gains. Because if the company continues to grow, we're going to make a lot of money off this convertible. So, we're going to have some fun with our Hans convertible bond. Let's go ahead and see if we can try another one, too. Because my biggest regret last series was I didn't buy any convertible bonds. Because I didn't do as much. So this series I might try doing more and then see if we can actually outperform. So Resorts International, 0% coupon, and you can see that the price is $200. So that bond has blown up. Korean Electric, So this is around $84 a bond, 7% coupon. That's pretty exceptional. But keep in mind, we'll be locking in for about 8 years. So that's a bit of a problem. 2043 sterling, not very good because they got a very, very high price. Let's see if this is a good one. This one looks pretty good because it's 2 years out. They're expected to make 56 cents a share. Management is somewhat mediocre. So, like, that's not very good management. They're okay. They have a lot of cash. They're able to pay off their debt. But if you look at their bank loan, that's quite high. But they're still able to satisfy their debts. But, like, the one thing I'm worried about this company is liquidity. Because if you look at it, they have $22 billion tied up in business assets. And then they also have 1,900 or 1.9 billion in working capital and 420 million in basically cash. So when you're like looking at like the liquidity of the company, cash is king. So like if you look at the cash and we compare it to like the bond, they can clearly cover their bond, but their bank loan, they cannot easily pay off their bank loan. They would have to sell off a few $1 billion of their assets in order to cover that bank loan. Or the company's earnings would have to go towards that loan. So that would kind of handicap this company a little bit. But you can see that like it's $19 a share is their book value. So if you get all their total equity, for example, their total equity being at 19319.31, and then you divide it by their outstanding shares of 1,000, you get about a $19 book value. And so like that's like the price that you can liquidate it for. So if the company were to liquidate all their assets and get rid of all their liabilities without change in value, the company's book value is a pretty good indicator of safety of a company. That's like Warren Buffett always likes to say, I like my margin of safety. So margin of safety being book value. If you buy a company at book value, like you can still lose money because if the company is unprofitable, their book value is going to shrink over time. But if their earnings are great, their book value generally will grow over a long period. But this company is quite expensive, but like they have great earnings growth. And you can see that the current PE is very, very, very low. So like this would be a great value stock to buy for us. But like the question is, are earnings going to continue growing? But like the PE is very, very low. They're very, very good at giving back capital to shareholders, but they have a lot more debt than the other company we looked at. Their dividend yield is pretty decent too. And earnings report, they're making about $700 million, and they're borrowing more money in their most recent quarterly report. What industry is this in? Company info. No, I want to see industry projection. So this is the brewing and distilling industry. What was that company that we're looking at? It's... What company? Oh, this is the brewing industry. Huh. So if I buy more of this convertible bond, we're going to be heavily exposed to the brewing industry. But that's okay, I guess. So let's go ahead and go into that for a little bit of extra fun. Because we have $5 million to spend. We can spend $100,000. That's relatively nothing in this game, at least. So we'll buy 103 bonds, $100,000 purchase price. Not bad. So right now we're heavily exposed to the brewing industry, but we have this company that we just recently bought. It's given us a pretty decent coupon, and so right now I think our ladder is perfectly well done. And so I'm thinking that if rates continue to rise, that will be very, very good for long duration bonds. But right now I'm going to hold off on buying. 60 cents versus 64, so they didn't make as much as last year, but they made $590 million. But they're still borrowing money. That has me a little bit worried. Oh, I also I keep forgetting. Look at the conversion price. Conversion price is $74 a share. So if it goes above 74, we can convert for profit. Nice. Hansen is getting wrecked. So like if we look at the Hansen bond that we bought, for example, it's currently at $95 a bond, and we bought 98. So because the company's price has fallen, the convertible bond price has fallen. But keep in mind, when it matures, they're gonna have to pay us 100. So we're still gonna make a slight profit in capital gains, and plus we're still making money off the coupon. So I have no concerns that the price of Hansen, for example, has fallen because we own a bond. So like if we look over here, I think I bought around here somewhere, and then like recently the stock price has just fallen. So I'm not too concerned because I own the convertible bond. I have the protection of a bond, but we still have lost money off of it, about $2,000. But our losses are capped because we bought a convertible. That's why I'm a big fan of convertible bonds, and I have plans on, in real life, continuing to look for opportunities because I just like the whole idea of them. I also found it interesting that if I pop up this, for example, where is it? Oh, I used to have it, didn't I? Yeah, right here. Pause the game. Yeah, the game's paused. Oh, no, it's not paused. So look over here, convertible bonds find their sweet spot, like the happy medium. So if you look at like the convertible total, so that's the blue, and then the aggregate total return index is gray. Oh no, the S&P 500 is black. So if you look at like the blue line, you can see the blue line is a lot less volatile. And during January, it didn't fall as much as the S&P. So like that's just an example of like a convertible bond. So like they generally don't react as heavily to like than equities. Yep, so I'm hoping that we do well. $4,000 received, not bad. Oh shoot! Yes, we're at 6%, which is decent. So like I'm probably just gonna do a little bit of long duration bonds right now because we can probably make a decent coupon. So I'm thinking about maybe putting $1 million towards the bond purchase. So if we do a recall database and then we look for like a triple. Oh, these are I'm still on convertibles. I want regular bonds now because I want interest. So triple B bonds, you can see that like a 2059 bond is going to pay us 8% coupon, that being Airbnb. So like that's a pretty good coupon, not going to lie. And there's a 9% for 2052. So SMC, I'm probably just going to buy a little bit of this because whatever rate, you gotta be, stupid rates. Are we still frozen on 8%? Yield 10%. That's pretty good. This is probably $1 million of this bond. I think I froze it perfectly. I think the chart just updated, so as you can see the chart crashed. But I'm gonna buy $1 million of this bond because I don't think it's updated, which is great. Worst case scenario, we'll just keep this bond for income. So we're going to buy about 9,000 of them. Purchase of $194,000. Oh shoot, this is $10 million purchase. No way. Let's buy 180 of them, I guess. 200K purchase. SMC. Fairly long duration. Gosh dang it, why did the rates have to fall? I was hoping that they would go up. That way I'll be able to buy longer duration bonds. But I guess I missed out on that. Bummer. Big bummer. But if rates continue to fall, our other long duration bonds we can sell, but they take up very, very little amount of our portfolio. Well, I'm happy I have some equities. Like these equities, they've been giving us some 5% dividend yields. So I'm pretty happy that we're still making a decent amount of money off our bond portfolio because we have those equities that invest. But I was hoping that rates would go into 8% and I would be able to lock in 5 million at 8%. and make a decent coupon. Here's some good news for Hansen. 90 cents earned versus 42 of last year. So like they made 450 million in profit. And the companies continue to borrow money though. That's the problem, because after they're just having cash flow problems. But the company has a 26% operating margin, which basically operating margin is basically the company's earnings, like after their fixed costs, like after all their costs, not after all their costs, but like it's not including interest and taxes. So like that's their operating. Yeah, Hansen's just having trouble lately. $28 a share right now. And it matures in 2044 and 2043 for the other one. So as you can see, my what's it called? My low, I don't know how to pronounce that, but it's gonna mature next year, and we actually made a slight profit off it so far. Not bad. I'm really hoping that rates rise. And here's our annual cash flow. Like we have a bunch of dividends coming in, some corporate bond interest, some cash. So we're making about a good $500,000 in cash flow. So like that's a decent amount. And we also have about that's our cash that we currently have. We have a lot of cash, but we have about $508,000 coming in from bond maturity. So a lot of our 2043 bonds are coming due, which keep in mind I bought a lot of 2043 bonds. So like every year we're gonna have cash flow coming in as long as we use the ladder and Strat. So we're still making some money, but we're not making as much as if rates were higher. Because if rates were higher and I was buying a lot of long duration bonds, and then rates were to fall a lot, we would be able to make, I would say, maybe at least double our money. Not at least, but like we can make a lot more than we are now. So a lot of this run that I'm doing, a lot of the bond only strategy has to do with RNG, as I think that's what a lot of gamers call it, where basically there's a lot of random numbers that could happen. I don't know whether or not interest rates are going to rise or fall. So if I'm lucky, sometimes I actually see that interest rates chill in the 10% forever in Wall Street Radar, at least. Sometimes they chill in 20% forever, for a while at least, for like a few years. If that were to happen in this series, oh my goodness, that would be some good RNG. And I basically want volatility. I want high interest rates, low interest rates, high, low, and to be able to constantly make trades on that. But because interest rates stay low for a while, I can't really make much because I can't make as much trades. So I have to improvise and try out different strategies like laddering and buying some decent coupons. Hansen's doing pretty well financially, but their profits fallen, and they keep borrowing money. So I feel like that's one of the biggest reasons why their stock hasn't been doing all that well lately. We're at 6.5 million right now. So as you can see, over the last ever since 2041, I've been relatively flat, which is okay, I guess. We ended in 2052 though. That's sad. So I'm hoping to probably finish the bond only this episode. But we're having right here. Oh, thank goodness. As you can see, I was thinking about buying some bonds around the 6% rate right here, but then they crashed. I would have been able to make a lot of money if I borrowed money there and then sold there. But now you can see that rates are much higher than they were. I also think last season I took a lot more risk. Like I borrowed a lot of money at like 18. I borrowed a lot of money at like high rates. I could have went bankrupt relatively easily. Well, it's this series, I'm not trying to borrow money. Okay, so right now is long duration season. So you can see right now that we have a lot of our bonds that sadly we locked in. So we have some bonds that mature in 2043, which is soon, 2044. So, like, sadly, these bonds, I can still cash them out for profit, but they're locked in, if you know what I mean. So the bad thing about those is that this money is relatively locked in. Like, for example, the SMC, the long duration that we bought, it's got completely wrecked in price so far. We lost 15 grand. But right now, we're going to go ahead and start buying up some long duration bonds because I'm craving for some good juicy coupons. So we're going to buy up some triple B. Now we're making 11% on our return. So a big thing I like to do in this series is the rule of 72. So you set 72 and you divide by the rate of return, 11. It would take about 6.5 years for us to double our money if we were to buy this DS something company. So we'll make a good return off that. While as if it was like a simple 72 divided by 8, it'd take us about 9 years to double our money. So like every percent matters. So right now we're going to buy up a long duration bond. I'm thinking about buying up at 2060 because this is the highest date I can see so far. So like that's a very high coupon too. So we're going to make 11% off this bond. So I'm thinking about buying a good 1 million. And if rates continue to climb, I'm happy. If they fall right away, I'm going to regret not buying $5 million worth of every bond I see. 7, 8, 6. So we're going to buy about 1,200. And that's cost us about $1 million. Almost $1 million and 1,000. No biggie. And so now our income should be a lot higher. We can see that now our income, 200,000 pre-tax, 160,000 right now. And mature bond proceeds, so we should be receiving $500,000 proceeds. So because we're receiving $500,000 sometime this year, I'm thinking about putting an extra $1 million or extra $500,000 towards buying up some more bonds. So like the Alaska Air, 2060. That's a relatively high yield. Any higher than 2060? 2066, 9% coupon. It's relatively safer too. So Toyota Europe might be a good buy. Because it's a very long duration, but the coupon isn't as high because it's a AA bond. But still, pretty good buy. I would have to look into the financials of the company in real life, but in this game, I usually just look at the credit rating, and I'm like, gives it a good coupon, buy. 8. Oh, no, the ask is 7, 9, 8. So I'm going to buy 1,200 of these. About 1,003,000 to buy, not bad. So right now we have about $2 million in cash, about 2.8 million right now. So I'd say that we're semi-balanced right now. So if rates continue to rise, I'm going to start using this 2 million plus the extra 500K we're going to be receiving soon towards buy up extra long duration bonds. But if rates fall right now, I'm still going to benefit because I just bought 2 million of long duration bonds. So right now I'm trying to make sure that I benefit both ways. Where if rates fall, I still profit a little, but if rates rise, I profit a little bit less, but also it's safer because if rates do fall. 8%. And you can see right now that GDP is slowing down a little bit. So whenever I see GDP slowing down, or it hits negative for more than 6 months in this game, that's known as a recession. So usually whenever a recession happens, interest rates likely go down. So that's why I'm playing a little bit aggressive with buying long duration bonds right now. It's because if we go into a recession, it's highly likely that the government is going to be like, people cannot afford to pay this much on car loans or this much on mortgages. So in order to speed up the economy and get it back working, because right now the economy isn't working, as long as it stays negative, they're going to basically, the government's going to try to keep the economy alive by lowering interest rates. So if GDP stays negative for a while, it's likely that interest rates will fall, and we'll make a lot of money off our $2 million that we just bought long duration bonds. Okay, it's now 8.8% right now, which is quite high. And you can see that I'm not much of a trader, but I was told in like one of my classes that like this is semi-important, like the support and resistance. I was also watching a video on YouTube, I forgot what it was, but he talked about like how important some technical indicators are. Like I usually don't look at technical indicators, but you can see it right now that there's like a roof and like there's somewhat of a floor with like this trend pattern. And so like you can see like that, like it will go up a lot and then the government will just lower rates, and then it will go down a lot and then the rates would go up because inflation gets crazy, and then they would fall, etc. So we can see that like around, I'd say 7.5%, around 7.5% is when the resistance usually happens. So right now around 9, I think right now we're almost at 9, around 9% interest. It just broke out, so it's having a breakout period right now. So this breakout period may stay for a while or it may not, I have no idea. But right now I'm going to start investing heavily in bonds right now, because there may be a reversal where interest rates go down, or if they continue going up, I can reinvest my coupons back into more stuff. So like sometimes the supports and resistance help. So I'm hoping that interest rates continue staying hot for a while, and I can continue making more money off our bond portfolio. So when I go for a triple B, 2053, that's relatively long duration, but I'm looking for the longest. 12% for microchip technology. 2065, that's pretty good. Hanson Trust. Yeah, Hanson Trust will be pretty good. So if we see right here, we have about, I think we have about 3 million spent in cash. 7 to 6, 1,300. About a $1 million purchase price, not bad. So now we can see that we have about $2 million cash, a bunch of corporate bonds. And I don't really like buying government bonds in this game because they have a lower coupon. Unless I'm margin it. If I'm borrowing money in this game to buy bonds, I usually like to buy the governments, because if the slight odds that a company goes bankrupt, then basically I lose the game. Because they go bankrupt, I lose everything. And I also leveraged on top of that. So I usually like buying government bonds whenever I'm leveraging, because it takes away that risk. Or at least makes it a lot less bad. Okay, we're now in the 9% band. Also, I like to see if commodity prices rise. Like if commodities are hot. Like if commodities go up a lot, generally that means inflation is happening IRL. Like right now, we're currently going through a lot of inflation, but the government is trying to keep rates artificially low by buying back bonds. But in this game, usually, I don't know if this is 100% true in this game, but I think it's like real life, where if you see that commodities like corn, for example, or wheat, if you see that they go up a lot in price, it generally means that you're in an inflationary period and rates are generally high. But if you see prices of commodities soften, that will likely lead to deflation, which will make rates go down. So whenever I see commodities or whatever in this game go up a lot, like for example with what is this? It's wheat. Wheat has gone up a lot in price. So right now I'm thinking that rates are likely gonna start slowing down maybe, or they may continue being aggressive. I don't really know. 2049. But right now I'm making about 13% off our money. I don't want to be too greedy though. I don't want to be like, oh, I could be making much more if I did this or if I did that. $13% from Duke Energy sounds pretty good. An extra million, why not? $1,700 of Duke. 1 million, not bad. So right now I'm buying a lot of long duration bonds because if interest rates do fall, we're gonna make a lot of money off this transaction. So like that's why I'm trying to hype you guys up for that. And the great thing about Ladderin is, if you look at our bond portfolio, we have a bunch of long duration bonds over here. We have some semi bonds that are maturing soon. We're gonna be making 100k from that, 100k from that, not a lot from that, not a lot from that, but we're gonna be making about 300k. So we're gonna be making a little bit of extra allowance, as I would call it, which will go into our cash, and we're gonna be able to contribute more into long bonds. So if rates continue to climb, our Ladderin strategy actually kind of helps us because we have a bit of a allowance set up, if you know what I mean. So if rates continue to climb, our allowance of $500,000 is gonna help us lock in, hopefully at a higher rate. Government bars, a combination of QAS and antitrust. GDP is still kind of staying negative, but right here we got speculator alert. As rates rise, banks tighten lines of credit for corporations. So right now, banks are tightening their lines of credit for corporations. So basically, they're restricting the supply of credit. And so that might continue to make rates go higher. So right now, it's a very, very good time for my bond portfolio because I'm going to be making about 13% interest. And you can see now we're making about $470,000 in corporate bond interest. And then after a year, we're going to be making about 1.8 million in cash. And that 1.8 million can be put towards more bonds. And then if rates continue to climb, more bonds. And then easily, if rates stay high for the next few years, I'm going to have 10 million under management. And hopefully we breach 20 million, I think, last time. I don't know what my record was last time. But I'm thinking we might be able to beat my record, or we might not. Like I said, it's almost all on RNG, because if this game decides, hey, we're not going to keep rates high. Okay, looks like there's a bit of a softening point for rates. So if I wanted to play risky and actually beat this challenge, I would borrow right now. Borrow. You know what, I'm going to save. This might not work. This might not work. Okay, so right now, recall. Let's just do a high risk strat, because I want to try to beat my record from last time. Long duration, 2061, 14% coupon. And GDP has been kind of low for a while, so it's likely that the government might want to pump in more stimulus by lowering the interest rates. So if interest rates lower, this leverage is apparently going to work really well. Oh, shoot. Stupid Zoom. My bad. One of my classmates. So if we look over here, I'm just about to buy a lot of these. And just to show you guys how much leverage can destroy you. Let's not leverage too much. Let's buy 7,000 of them. So the purchase price is 3 million. So we're gonna borrow about we're gonna borrow about 3 million. So right now we have about $3 million in debt and $8 million in assets. So we have about $5 million net worth right now because we borrow about 2.9. But if rates do fall, we're gonna make a lot of money off that bond purchase. And I kind of broke my own rule. I bought like about 3 million extra of this bond right here. So let's just hope that rates fall. I'll be able to make a ton of money. Because I'm thinking that interest rates are going to soften. Uh-oh, GDP just went positive. So if it stays positive, they might raise rates. But I'm thinking that they're gonna probably slam on the brake, maybe. Because like this 10% interest rate scenario, it can't last forever. But like I also saved the game because if I'm wrong in my decision, I can lose a lot of money. 11%. GDP is still kind of high, but it's not even that high. It's like relatively low. Are we cash flow positive? Yes, we are. We have to pay. Where's our interest? Less projected bond discount. Interest expenses are 300,000. Oh, that's cool. So like the great thing about this is the reason why I didn't want to leverage too much, because if I leverage too much, I can't afford the interest. But because I only borrowed 3 million, I have 5 million left in equity. I think I can afford the interest so far. So if you look at it, we make about $1 million projected total income. But because I borrowed a bunch, I think I borrowed 3 million, and that interest expense is 300,000. The great thing is that comes before taxes. So we see our income, that our pre-tax cash income is 600,000. Bond discount is added back because we bought a bunch of our bonds below par, which is below 100. And you can see right now our tax on projected income. So right now we're expected to be cash flow positive and have 800K. But if rates rise too high, we're not going to be able to afford this loan. So that's the problem. So right now we're just going to keep a lot of cash and pay off our loans, because we have about $3 million on our back in debt. 10%. Come on, I want rates to fall because I just leveraged a little bit of money. But right now, it would hypothetically be best probably not to borrow money. We lost about 19K off this bond so far. I'm going to use with that 800,000 is I'm going to pay off my loan. And if rates stay high for a while, then I'm going to continue buying bonds. Because right now they're at 11% interest, which is ridiculously high. It's about 9:30, so I've been live for about an hour and 20. Ouch. Ouch, ouch, ouch. So if you look at our chart, our net worth is actually falling a lot now because I bought a lot of large duration bonds. And if we look at our, where is it? 3 million? We lost about 200,000. So that hurts a lot, but we still have a positive cash flow. So that's really, really good. So like, if rates continue high for a while, we're gonna be in a little bit of trouble. But we can afford this loan right now. And thank goodness this is before tax. Because if the interest was after tax, we'd be in a lot more difficulties. Right now we're doing okay. And rates are starting to cool down. They cooled down a lot, so let's go ahead and go into a... What are they doing with interest rates? They're easing. So right now we're going to lock into a long duration bond right now. We're going to do some long-term governments. And we're going to max out our leverage, which is stupid in real life, but this is a game. We're going to borrow an extra $3.5 million. So now we have 8 million in government bonds, 8 million corps, 4 million in governments, and we have 6 million in debt. So our net worth is still 6.5, but we're double B. We cannot borrow more money, and we're paying 12%. If we look at our cash flow, it's slightly positive. So if rates rise above 8, I'd say above 10, we would lose a lot of money off this trade. But if interest rates continue to ease, which I think is likely, we're going to make a lot of money off this trade. So I'm hoping that rates fall down to like 1% on the short, and then I can make tons of capital gains. If I can make a ton in capital gains off this, we could potentially beat my record. Because right now we have about less than 10 years to break our record. Please fall rates. That'd be amazing. 7.5. 7%. So you can see that like these long durations, they have made us bank so far. and same with the other long durations. So like this is why I like buying long durations, because right now we made a bank off them. And so now we can look at our net worth. We've skyrocketed. That's all because we borrowed money. If I didn't borrow money, I would probably not make as much. Like I said, we want to take extra risks to try to to try and break our record from last season. Because I think it was 20 million or something. Banks were more aggressive in lending, so they're increasing the supply, increasing loan limits. So they're making more supply, so the supply of credit should become better to get for more consumers. That's all because the government's like, yo, we gotta help bail out my boys who are going through some hard times. So let's go ahead and lower rates, make it more affordable to borrow for corporations. When it's more affordable to borrow for corporations, they're able to buy equipment and continue job growth. So like that's one of the biggest reasons why they lower rates. It's because they want to help out the economy. Because the economy was going through a bit of troubles. Okay, so now if we look at support and resistance, it's way below the support right now. So it's about time we sell our bonds for big gains. Look at these. Freaking 2 million right here, 2 million right here. So we made a good 5 million before taxes. So we're gonna go ahead and sell our long bonds and cover our debts. So that's about a $7 million. So we made about $2 million in gains. Not bad. So now we're easily to pay. Now we're actually able to pay off our debts. So we go over to MISC, repay. And now we have about a good million in cash and a bunch of corporates. So if rates continue to fall, those corporates will be worth more, but I'm just going to go ahead and sell this bond. And now we have a bunch of cash. If we look at our... how much capital gains we have? We have a good 5 million in realized capital gains. Sorry about this. 5 million capital gains, a bunch of taxes to pay, no biggie. And then we have a bunch of others. So if rates continue to fall, I'm happy, but I'm not gonna be too I don't wanna jinx my capital gains. So we're just gonna try to sell most of our bonds right now. 17, we made a good, how much? 600,000. And okay, so there we go. We made a lot in capital gains off that transaction. It's also another one that's a big purchase. I'm just gonna sell all my big purchases right now. Now we want to sell the long durations because right now rates are very, very low. So we can sell our bonds for big money. So we're taking on some capital gains. So right now we have almost no bonds, but we had a lot before. And now we have about 13 million in cash, 14 million net worth. And we could also do some capital loss selling, but it's not worth doing. We don't have any capital losses actually. Rates are falling, that's good. There's also another long duration right here, about 5,000. I usually just like to sell bonds entirely at these low rates. And right now I'm going to go ahead and take out a bit of a risk Okay, right now rates are as low as they're likely going to be forever. At least I think. So right now we have a net worth. This is where I try out my new strategy that I implemented, I think, last episode and the episode prior. So 14,504, 247, divide that by 2. So this is the amount of money we're going to use for a loan to short the government bond. That's one of the biggest reasons why I think I didn't buy the government bond ETF. Is because government bonds, they usually have lower coupons, so they're much more volatile at these low rates. So hence is why I'm going to go out here, not do that, made a mistake, ETFs, and we go over to fund investment strategy, permanent government securities, and if we look over here at the price of this bond is 97 currently, for like the ETF I mean, and if we look at like the chart of the bond, you can see that it's at an all-time high right now, and that's because rates are so low. So right now we're going to try out a bit of a hedge fund strategy where we simply short this bond, and if rates rise, the bonds, the prices of the bonds would drop. Like the bonds they have or whatever, the prices will drop, and the ETF will drop in value, and we're going to make a bit of capital gains if that continues. And we can reuse those capital gains that we made from the short sale towards buying other bonds. If you know what I mean. So right now, we're going to go ahead and sell short. You have no shares to sell. And so now we're going to short this. So this is the big problem with my strategies. With shorting, you can lose more than 100%. But the great thing about bonds in this game, bonds are relatively low risk, low return. So it's very, very likely over the long term that rates are going to go up. And so we're going to go ahead and short this ETF. Because screw this ETF. And we have about 7 million. That's about half our net worth I want to put into this trade. So we're going to short half of our net worth, basically. So we're going to divide it by 97.22. We're going to short about 75,000, almost about 75,000 shares. We can short about 300,000, but that's dumb. So that's about 75,000, 7.2 million we're going to short. And I could also probably do puts too if I wanted to. I'm probably going to do a cheap. I'm going to go ahead and try this. Hopefully this is not dumb of me to do. But if we go over here to GMB or whatever, and then we go in and buy a put. Shorten is actually pretty bad, I think I've heard. But if you buy puts, they're relatively lower risk. So I'm going to go and try out buy the put. So I'm going to buy 1 million worth of puts. What's the put I want? What if we do it at 122 a share? Our premium is very, very high, so no thank you. If we buy the buy put and we buy it at 97, our things are relatively cheap. And then over the next few months, I'm gonna bet that. So we're paying about $9 in premium. How much is $9 in premium divided by? So we're paying about 9%, 9.2% premium. So we have to make at least 10% in order to break even. It's probably very, very dumb. What's the 97? 10,000 shares. 10,000 shares. So we want to. And these are in hundreds, so divide by 100. 103 of these I would sell. So 103 of these times 100 is about 10,000 shares. So we bought in at 93,000. We paid 93,000 to purchase this, right? And how much buying power do we have? So right now we're heavily shorted against the government securities. So we paid about $90,000 in premium for this put. So I think that's a lot cheaper than actually shorted. But the one problem that I don't like about the put is when I buy the put on this company, it's limited. So I think I have a few months for this thing to be worth a little bit less. Whereas with a short, I can just hold that indefinitely. So I'm hoping that rates do rise fast, and I'm able to make money off that put. So rates hopefully they go up. Yeah, they're gonna go down, which I think is bad, which is really bad. But if they decide to rapidly increase, which I'm thinking they will, because GDP is very, very strong right now. So it's likely that inflation might get bad. Take losses on shares. Okay, we're definitely gonna watch the government securities. So like they've all been in price, now they're rising. Okay, now they're falling in price. So if we look at our put is in the money a bit. So basically with me buying the put, I'm shorting the company. So it's another way of shorting, but like the problem is I have time limit with it. Or it's with the short, I don't have a time limit. But the put, I think puts are much better to buy. So hopefully we can make big bank off that put. We're basically hedging ourselves against the potential increase for interest rates. As you can see, this bond ETF is getting destroyed by the whole fact that interest rates are going up a little bit. So if they go up a lot, we're going to make a lot of money off this transaction potentially. It's basically as ways of hedging. Wait, why are we losing money off this trade? Did I buy a put? Also with the short, I feel like I have to pay like a servicing cost with it. I have to pay like the dividends that it pays. Stock portfolio, prudent government securities. Oh, so we made about 1.5 million so far off that short. Woohoo! And our puts, I think, we're making us a decent amount of money too. That's golden. So I don't know why it's showing that my net worth hasn't grown that much. But if rates continue to rise, yeah, rates rose a lot faster than I thought they would. So like this short has really helped us. Okay, so now it's time for me to cover my short because interest rates are at buying point for me. So, oh, I said pause, my guy. So we're going to go ahead and do this. And simply to cancel out your option, you just do the opposite. So we're going to sell a put. Right? Yep, so we made about $234,000 off the buying the put. So we made about 230K off buying the put. So that's pretty good. But if we look at our short is so much better. Because if you look at our short right now, we made about 2.5 million. So that extra 2.5 million can go towards. So like, if we actually look at like the percentage gain that we made off this sale of the short, so it's 97.12. I should have done the put. I think I would have made more money if I bought the put than if I would have shorted, but we did okay. 97.12 subtracted by 64.21 divided by 64.21, maybe about 51% return off that short. So that's pretty good. The most we can make is 100% if this ETF goes to zero, but it's very unlikely. So we're gonna go and take our almost 2.5 million profit, and so now we are sitting at about 14 million profit, $14 million in stuff. And so now we should be blowing up in value because we just covered our shorts, and now it's time to buy because I am deliciously looking for some tender coupons. Triple B 2050. What's the current year? I usually update this every now and again. 2043. So we're looking for a very, very long duration. It is currently 2052. That's not very long. 56. That's close. 61. 67. My bad, I'm buying 1 million of this. Spider 8000. That's about $10 million purchase price. What the heck? Oh, my bad. 1.4. That's how much they're asking for. My bad. 804 of these. About $1 million. Not bad. So, instant ball insurance. It's a very, very expensive bond to buy, but it gives me about a 10% coupon. So that's pretty exceptional. And now we have about 13 million. So I want to put an extra 3 million towards long duration bonds. And if rates continue to climb, I'll continue to buy more. 2058, that's pretty good. It's 2062, that's really good. Anything better? Anything better? 2064. 2064 I'm happy with. $2064 bonds, and then we divide that by 7, 7, 5, 9, 1300. $1 million. We're gonna need an extra 2 million. $61, that's not bad. 64, Oakwood Homes. Finance Capital has a little bit of a higher coupon. And that has about a 7. Oh, I'm gonna buy 1 million, my bad. 1300. 1.1 million. 1.2 million, my bad. No, what? Not 1.2. And I'm gonna buy 1.3 million of a different bond. Finance Capital we just bought. I don't want more exposure. No, thank you. 2062. Divided by 803. 1600. 1.3 million, not bad. And so there we go. We have about 10 million in cash, 4 million in assets. Hopefully rates continue to rise and I'm able to take advantage of this. Right now we're making about 400K in cash. So right now we're gonna make about, after our taxes, because we have a lot of taxes to pay, we're at about 9.5 after a year from now. So that's not bad. We have to pay about $500,000 tax, sadly, but I'm okay with that. Hopefully rates continue to rise because GDP growth is just ridiculously high right now. So part of me is thinking that they're going to continue to raise rates. And especially because oil is ridiculously high right now. So they probably want to slow down that growth in oil by increasing interest rates. Silver's high and wheat's high too. It feels like we're in real life right now. And gold is opposite, where it's not. Gold's actually a good buy right now. Because right now we're currently going through a growth period where they have a bunch of GDP growth. Like this is probably the highest I've seen in years, since 2040. So it's pretty likely that interest rates will continue to rise. So hence why I'm a big fan right now of buying some long durations. But the economy might be too hot, and so it might crash. And so that's why I'm buying up a lot of. That's why I'm buying up long durations, because if rates do crash, hopefully rates continue high. You know what? I'm not gonna play around. We're not gonna wait for rates to rise. We're just gonna reinvest our coupons. 2062 Smith Barkley. That's not bad. Anything better than 2062? 2062. That's the best one I could find. So let's buy an extra 2 million, an extra million of this. Divided by 6, whatever. 639, 1500. I'm doing okay. How are you doing today, dude? Just playing some speculator right now, trying to manage my bond portfolio. Oh, Green's from Argentina. How you doing? Yeah, so right now, rates are very high in this game. So I'm basically betting that when interest rates do fall, our exposure to these long bonds are basically going to make us bank. So I'm hoping is that rates continue to stay high for a long period of time, and I'm able to continuously make more. Because right now, our rates are very attractive. Oh, we just converted Hans for convertible. Awesome. So that's one of the benefits about buying a convertible. So right now, See, that's why I like Hans. That's why I like doing convertible bonds, because I think it said if the convertible was above $52 a share, we made money off of it. So we decided in this game, we automatically did it. We bought a. I found your channel by searching gameplay for the Speculator. Yeah, Speculator is a pretty cool game. I found this game over the internet a while back, and I've always really liked it, just because it kind of teaches a bit about finance and stuff. Yeah, so like this game teaches me a lot about like how finance works and everything, because the principles are there. Whenever rates are very high, you generally want to buy bonds. Whenever rates are very low, you generally want to buy stock. And like generally, it's right now bonds are very attractive. In the lower rate environments, they suck. So right now, I'm gonna go ahead and sell Hansen Natural Corp. Thankfully, I bought their convertible bond, and the company grew over the few years I owned the bond, and I was able to convert it. So because I'm doing bonds only, I'm gonna still go and sell the stock for a giant gain of around 100,000, and we can put that towards whatever we want. So right now rates are very high. They're about to hit the resistance, so I like to look at this as like the technicals. So you can see that like for the 5-year bond, the 5-year chart for the government bond, you can see that like basically the support would be around here somewhere. So like they fell way below the support, and I tried out a strategy that's new to me when it comes to this series, where I shorted the government bonds around here, and then rates rose a lot, and then I was able to make like a good almost 3 million in this game by shorting the government bonds. And then right now they're about at a high level where they're way above the resistances of around 8.5, I would say. Around 8. They're usually very high. So right now it's about time I buy a lot of bonds, because if rates fall, I'm going to beat myself up if I didn't buy bonds, because they could go to 12, but if they do go to 12, I can just have my coupons that I make from my bonds towards reinvested at the higher rate. So right now, I really don't want to miss out on these potential great yields, if that makes any sense. So I'm going to buy about an extra 8 million of long duration bonds. So what I'm looking for, the current year of the game is 2044. So your short duration bonds are a lot less volatile. So for example, if we buy up a 2046, this bond matures in 2 years, and they're going to pay us back 100. So we're making about a $5 capital gain approximately, and it's going to pay us about 9% coupon for those 2 years. So we make about $10 for every 100, almost $10 for every $100 we put in before tax. But like the thing is, I want income for life or income for a long period of time. So that's why I'm doing long durations, because they're very, very price sensitive. But if the yields on the bonds fall, this is going to make me a bank because I'm buying long durations. So General Mills looks like a very good one because it's 2065. There's also 2067, which I like more. So basically, I'm looking for the highest year. This one looks bad. Doesn't look bad. But I'm a big... Oh, 2068. Quaker Oats. So, like, they're issuing new bonds right now. How much have you invested? I started this series about 2 episodes ago. And I started off with, like, about 100,000. And I'm just messing around with this series. Like, last series, I think I started off with 100,000. I don't know how long the playtime is for this, but I think it's 30 years. I think 100,000 over 30 years on my first time playing this series. I made 100,000 worth 20 million in this game. Like, this is a game. It's not very, very realistic. Like, this is, like... But, like, it's just me mainly applying the theory that I know into real life, where I'll be doing bond ladder and strategies. Bond ladder and strategies being... buy a 1 year bond that matures in 1 year, a 2 year, a 3 year, a 4 year, a 5 year, and that way I have constant liquidity coming in through the bond proceeds. Basically, it helps spread around your interest rate risk. I've been doing that a lot lately. I've been doing a lot of bond immunization, where I try to mitigate the risk of my bonds that I have. Like, I'll sell long durations whenever rates get low. I'll buy up a lot right now. Do I study finance? I'm personally, for me, I've been going to... I went to college in 2019. I still go there. But I'm just doing financial planning right now. So I'm trying to, like, learn how to be a CFP right now, which is a lot harder than I thought it would be. But right now I'm trying to just stream and play this game and try to offer as much value as possible to my viewers. So I do study finance. I have my I actually have my securities and everything, like my CSI as they would call it in Canada. So, like, I've been doing this for, like, a lot of time. Like, I've been doing this since 16. I found it very, very interesting. So you study our accounting? Yeah, accounting was very, very interesting for me at start, because it's like, you can, like, look at a company's assets, their liabilities, and, like, their revenue that they produce, or, like, the earnings that they produce, and you can somewhat gauge whether or not the company is going to do well or not. That's what I really, really liked about accounting. But I don't know much about accounting. I learned a bit about, like, the debits and credits and everything that you guys had to go through. But a lot of the accounting that I do is just all financial statements. Yeah, part of me is a little bit lazy on writing articles at the moment. I'm hoping to write more articles and continue to add value. Part of me is busy, though, and part of me is also lazy because I want to enjoy my free time, if you know what I mean. But I would really, really like to live in a world where all I do is just make YouTube videos and provide value to you guys. But I can't do that at the moment because I am going through school full time. I'm going to probably try to become more productive and make more videos. I want to try to do that. Hopefully it goes into 10s. If it goes into 10s, I'll buy a little bit more. Yeah, I've been playing around with different strategies though. I've been taking a lot of high risk in this game because you can do that. I've been borrowing just recently, like I think I was borrowing money around here, or like around here, and then rates fell. I was able to make like a good, almost 10 million profit, I believe, or at least 5 million, and I shorted interest rates, and then rates went up. That hurt the government bond ETF, and I was able to make like a good, almost 3 million profit. So like just playing around with different strategies, like that's why I'm a big fan of that. Like I'm always a big fan of investing. Like I like investing strategies. Like I'm not much. I'm okay at researching companies, but I'm more of a strategy kind of guy. I've always liked strategy games. Yeah. I'm a big fan of like looking at a company, and a lot of the times the financials are helpful for a company, but a lot of the times you also want to focus on like the narrative of the company. Like, you want to be like, oh hey, this company, for example, Coca-Cola. You might like Coca-Cola just because they sell soft drinks, and you think that soft drinks are not going to become irrelevant 20, 30 years from now. So you might as well own some Coca-Cola. Take advantage of people that, not take advantage of people, but just make a bit of money off people that buy a lot of Coca-Cola or whatever. Like, I'm a big fan of like the story investing, Peter Lynch style. But I also do a bit of Buffett investing where I try to look at companies that have a margin of safety and they have like a moat. Like, I try to combine like a bunch of these mentors into my financial models and everything. This game is mostly quantitative data where you look at data and you're like, I'm gonna buy this, I'm gonna buy that, but you can. Well, if you have your money invested, you reinvest the dividends, you can live off that. Of course, it requires a lot of money. Yeah, sometimes it requires like at least 1 million, which is crazy because if you make 5% off a million, that's about 50K a year, pre-tax, before taxes. Keep doing what you like. Yeah, thank you. I really appreciate it, dude. It looks like interest rates are starting to slow down, so I'm going to start dumping a lot more money into these bonds. So let's go ahead and go deep into bonds. And in worst case scenario, if rates continue to rise, we're going to go ahead and just reinvest our coupons back into more and more long duration bonds. So I really like this. I think I'm doing okay with this strats. I may be doing the strats this season. Last season I tried out different strategies, like I did last season. I basically just did only long duration, and last season I just did long duration, where I bought like where I do right now, where I'm buying long bonds, and then rates fall, I make a lot of money. Do I have Twitter? I think I made a Twitter a few years ago, but I don't use it. I mainly used it for news, but that was like when I was like 15, so I haven't used it in a good 5 years. I really want to try to get on the social media game, but I have an Instagram and I also have a Discord, but I'm trying to mainly stick to YouTube mostly. I know it doesn't help me diversification wise. Oh, 2067. That's a very good bond. Istanbul Insurance. Buy an extra 2 million of that. Useful for finance. Yes, it is. I really like it that Michael Burry, for example, he has oh, must have messed up the math on that. Yeah, I really like it that Michael Burry, for example. I really like it that Michael Burry has like Twitter. You got Chamath Patatel or something, Patatelli. I don't know how to pronounce his name. He deletes his tweets, yeah, because like the SEC's like, bro, you can't say this, because like they're mad about, like, I think Jay Powell is obviously mad that Michael Burry is talking about like his transitory bet. Like, a lot of people, like, there's this funny meme I found a while back, where it's like this person like got The Big Short movie and he edited it into a meme where it's like inflation isn't transitory, and like he just said, screw your putts or whatever. Yeah, I'm also a big fan of Michael Burry too, because I like his thought process on things. Like he must have made a lot of money off GameStop, and I missed out on that boat because if you go back on to like some of my older videos, I think one time I was asked in like chat on here that like, hey, should I buy GameStop? Well, I usually don't give stock advice. I mainly try to provide my knowledge and my insight and my personal view of things. Yeah, so I was like, GameStop doesn't look like a bad company, but personally, I wouldn't buy GameStop. And I hopefully, I don't know, I was wrong. And when you're wrong when it comes to investing, you just learn from your mistakes. So, whenever I see a company is like heavily shorted, like GameStop, and I see the potential for upside, I might want to do that. Just because, like, I learned from a lot of mistakes and everything. Or at least I try to. Add trope. Just looking for high numbers right now. Bird deleted his account. $1,500. Yeah, personally, I think I went over a bit in my beginning of the live video. I went over like my personal investments. Like I'm Canadian, so like that's why I call my channel Canadian Investor. But I own like a lot of Suncor. I own a lot of Fortis Inc. So I'm a big fan of like those dividends, just because it gives me a monthly allowance, or it gives me like a quarterly allowance, which I can re-put those dividends into more dividend companies and continue the snowball. I've been a big fan of Suncor for a while. I was down myself lately and everything. Like, that's an oil company, and also have a electric company. You guys probably you probably have good opportunities in Argentina too that you can invest in. Like, I'm thinking about maybe in my future going into international companies, but right now I'm still a student. I'm like 20 years old. So I'm thinking about getting into them later. I don't know too much about the situation with GameStop, but before the price rises, it didn't seem like a great company. So if you like to buy innovative or good companies, you shouldn't buy it. Yeah, GME, they had a lot of debt, and so I was just like, no thank you, I'm not inheriting this debt. Same with AMC, but I wasn't going to short it. Like, personally, I'm not a big fan of shorting in real life. Like, in this game, I'll short just because it's fun to do. But in real life, I don't want to bet against anything. So, I never really bought AMC or GME. I didn't short it either. So, I just ignored and almost thought that they didn't exist. But, yeah, so GME, basically, a bunch of people went ahead and looked at a company that was insanely shorted. I think his name was like Roaring Kitty, and he made millions of doing it. So here's like here's a streamer. This guy also makes pretty good content, but I don't watch much of it. But like, there's so much good YouTube content finance wise that I really want to get interested in. So, like, for example, Roaring Kitty, he talked about, like, this came out about a year ago, where he talked about 100% plus short interest. I haven't watched the video, and I'm kind of sad I didn't, because I would have made a lot of money off this, especially if I did calls. He's looking for, like, deep value, companies that are basically pronounced dead, but end up getting revived, or end up doing well. Don't invest in Argentina. You want to invest in other countries, invest in stable countries. Yeah, I think I was gonna make a joke, or it's not really a good joke, but I think Argentina hasn't they gone bankrupt? Hasn't the government gone bankrupt like 7 times plus or something? I believe. Yes, he is the Wall Street Bets hero, and then we also got like the ape movement. I've been watching all lately, where it's like, where is it? It's like ape. I also been watching like this lately. This is a very, very interesting video where, like, it covers basically AMC and how the apes cracked Wall Street. So, like, basically Wall Street Bets rebranded themselves as basically as apes instead of idiots. I think they call them retards or something, or idiots or whatever. I don't forget, or degenerates or whatever. Like, that's what Wall Street Bets community is called. But instead they decided to rebrand as apes, and then they went into AMC like heavy, and that's why AMC and GME have been crazy this year, and I missed out on that. But I'm not gonna buy in at these inflated prices. I found this a pretty cool video though. It's a little bit long, but like I was watching it a little bit. Also like the Plain Bagel, he's pretty good too. I'm probably gonna watch the DCF video later. But yeah, back to the game. So, do you mainly invest in like the US or something? Because I'm assuming like you don't want to invest in Argentina or anything. Because the government do a lot of QE. They think they can spend all the money and don't have any consequence. Oh yeah, it's crazy how much bond buying the government has been doing. Like, just recently the US decided to stop tapering, stop supporting their own economy. So now, basically, the market's going to support it. Yeah, like, the amount of stimulus we've given out the last few years has been ridiculous. And, like, a lot of people are thinking, like, that's one of the biggest reasons why we have inflation right now. And also with, like, the shortages and everything. Like, I'm pretty glad I got into a little bit of commodities, like commodity companies, because those tend to do well during inflation, because prices of commodities have gone up a lot lately. That's why when they can't QE more, they get a loan. Yeah, so like right now, there's not a lot of support for the government, because like the government, they already have interest rates so low. They've been doing a lot of bond buying. They've been doing a lot of stimulus through like the government and everything. There's like not much room for error. So if we go into another recession due to the high oil prices, for example, we're in a lot of trouble. Like that's a potential fear, is that government can't pay off the debt. It's restructured. Yeah, I think I've heard rumors that like the US government almost went bankrupt because they couldn't raise the debt ceiling. I kind of found that kind of crazy. That's in Argentina. Damn. I know someone who from my class who's from Brazil, and he's been talking about Brazil going through a lot of trouble through COVID too. I always think of Canada though, because like that's where I'm from, so like I usually think of just Canada, but I think in some countries probably have it more difficult than Canada, like especially vaccine wise, etc. But like I don't know much about Argentina. Like, I mainly try to stay in my circle of competence, which is Canada and some of the US. But I don't even buy much of the US. So I'm going to buy, 1.4 million. 632. You asked me about if I have, invest money. I don't, but I really like finance and investing. Yeah, like it's like I feel like they made investing a lot easier to do. Where like you can start with like, at least in Canada, we have something called Wealthsimple. In America, they have Robinhood, which is very nice. They can get started with like very, very little. But I also understand like why some people don't want to start investing. Like I have some friends that are in my program who don't want to invest anything because they're a student and they're working on they're trying to work like pay off debt or do anything else that's better, because if you pay off debt, that's like a guaranteed payoff. It's cool that you're interested in this stuff though. I'm pretty glad I got interested in this stuff when I was 16, because I was playing GTA 5 and I was like, hey, this is a pretty cool game, and I realized they had the stock market and I'm like, hey, maybe I'll try and get rich. How much are the bonds paying for the American corporate 7% for the governments. You know what? I think I've had enough of the corporates because I don't want to be too exposed to corporates. Let's go and wait for rates to rise a little bit. If they don't, they don't. Oh, looks like rates are starting to slow down. Yep, so let's buy about 1.9 million. Okay, that's enough bonds for now. So we're going to reinvest our interest in our coupons into things. So right now we're going to be making about 1.2 million corporate bond interest. So right now we make about $900,000 at the end of the year. I have a lot of books to read about investing. So do I, honestly. I've only read a few of them. Like the first book I read about finance and investing was The Wealthy Barber Returns. It was like the first book I read about investing. It's not a bad book. It mostly goes over consumer, like personal finances, like credit and everything. But I found the investing side pretty cool, where it's like you can buy ETFs and everything. One of my favorite books, in my personal opinion, is One Up on Wall Street, where he goes over like, he doesn't go over like any ratios that you should look at or etc. But like he just looks at like the story and like why you're buying the company is very, very important. Like what kind of books are you thinking about reading? Because like I have an entire Audible section of like 20 plus books I want to read, but I always have trouble managing my time. Yeah, I'm more orientated towards value right now. I have a little bit of growth stocks, like I'm in a little bit of growth companies right now, but I'm mostly in value just because I believe value is a lot safer. And I just like receiving those dividends, and then I like reinvesting those dividends. And so I'm a big fan of those. That's also why I think I like bonds in this series too. By Peter Lynch. I have it on my list. Yeah, I really like One Up on Wall Street too. Where's your list of books? Yeah, I have so many books. I've just been adding to this collection a lot too lately. Library. Just give me 1 second. So, for example, these are the books I'm thinking about reading. So, like, I have a book about emotional intelligence, a book about richer, wiser, and happier. So, I was watching Joseph Carlson. He covered this book for a little bit, and they cover a lot of stories in this book. So, I feel like this might be a pretty good story read. I really like Chris Haroon. I think that's his name. He's pretty good. He teaches you like 101 lessons that you don't learn in business school. I think one of them is like know when a CEO is lying to you. Another is like try to have like a day off every year. Yeah, I like how we both think similar. I have never split the difference. I haven't read a single minute of that. I found this one interesting, where it's basically goes over content creation and how everyone basically steals off each other content wise. So like that could potentially help me that could help me with like making content, because a lot of times I'll have writer's block and I won't know what kind of video to make. So sometimes slightly copying what other people are doing, but make sure to edit around it. You want to steal like an artist. Another book about how to pick Aswath. He's pretty good too. Aswath Dormadan. He's also got a YouTube channel too. This is probably one of my favorite YouTubers for learning about finance. He goes over a lot of tricky stuff. He goes over a lot of like complicated stuff though. So he's more like, he goes over statistics. I'm learning statistics in my course, so I find that pretty interesting. Yeah, no problem. Nine Lives About Work. I have another book about Snake's Life. I don't know. I just bought that. I think I got it for free. I have some meditation books, some common books. How to reading financial statements. A lot of these books I haven't read. This is personally another book I like, but it's just one of my favorite rappers. I don't know why I listen to Gucci Mane, but he's okay. He gives a great guide to success. Another book I bought. I don't think I like these. Swing Train. I have like so many books. So Good They Can't Ignore You. Investment for Dummies. Securities. Analysis. I have this one too. How to Win Friends and Influence. I have so many books I want to read. Like, I want to read the Elon Musk book because I think that's a really good one. I have a book, Monster. This is like a book about a criminal, like a young criminal. It's a pretty interesting read for story. And then that's really it. Yeah, Aswoff is one of my favorite teachers of valuation. But, like, his stuff is too complicated for me to pay attention to half the time. But, like, if I actually had time, I could probably learn it. Okay, so we don't have a lot of liquidity right now, but my main objective right now is just going to receive those coupons and then contribute. So right now we're at 900,000 expected at the end of the year. So right now, if bond prices continue to go down, then that'll make... I don't know if they continue to go up. Because if they go up, that makes the yield fall. My bad. Yeah, we have an extra 300,000 to spend. Let's start doing some governments. Let's buy 500 of them. Yeah, I've been doing this YouTube thing for like I started in 2020 of March. And I mainly just did it because I was bored. So like I've been doing this YouTube every now and again. I've been trying to do more of it. You say that you like strategy games in quarantine. I started playing Age of Empires for the first time. I heard of the game but never played. Yeah, I think I've heard of a lot of people say that it's a very, very good strategy game. Like, I have Steam and everything, too. Like, personally, I've been playing a lot of Black Flag lately. Like, as Assassin's Creed Black Flag. I just like to do the ship battles. Like, I like to raid a lot of enemy cargo in that game. It's just more of a personal kind of thing, though. Yeah, I've always grew up with I always like Bloons Tower Defense and everything. Like, I remember playing that when I was little. I'm a big... I really like to think analytically. So, like, by doing that, I usually like to play strategy games. Oh yeah, we're making bank right now because we bought those long durations. Okay, we actually might beat our record from last episode because I think if I look at my YouTube and I go over to my channel, Fixed Income Only Challenge, Episode 3. So let me see if I can try to beat my record from last thing. So if we go over here, it's like the very, very end. How much money did we have? We had about... Sorry about the lag. Net worth. So we actually might beat this record this time. I am playing Quarantine. I started playing chess. Yeah, I used to play chess with a buddy of mine, but I stopped talking to him because like he went dark on like Discord. He stopped talking to me, so I'm okay with that. I didn't really like him all that much either. Uh, he wasn't that good of a character, if you know what I mean. Like he had a little bit of an attitude problem. I played a bit in 2018, but not too much during 2020. Where were we at? We were at 19 million. Okay, so that's our main goal. We're almost at 19 million right now. So I think definitely the shorten of our bond, like buying shorting government bonds, was a very good strategy to add in this game, because we obviously are getting very, very close, knock on wood, to 19 million. So I'm going to probably likely beat this record. So now we're going to go and sell all of our bonds. So we look over here, we made 966,000 off this government long bond. We're going to go ahead and sell them all, because right now they're at very, very low rates, like they're at their support. So it's very, very likely that they might raise rates or they might lower rates. I have no idea. Commission, 3.2 million. Made a gain of 890,000. 800,000. Can't speak today. Government bonds. And if rates fall any lower, I'm going to go ahead and try the short strategy again and see what happens. A net gain of 959,000. We're at 11 million right now. Dang, I didn't know that was the position. Quaker Oats spawned. And then we go ahead and sell that. 829,000 gains. Ooh, I love the long durations. Freaking 236k gains. Okay, I'm gonna stop down for now, and if rates continue to ease, that'll be great. It's pretty unlikely they would. 3.6. 3.62. Look at the short bond. Okay, go ahead and sell some more because rates fell a little bit lower than 400,000 gains. I could probably one of the things I think I keep messing up in this series though is tax. Like there's probably some tax strategies that I could do that help mitigate my things. Like I think I gotta wait a little bit before I sell my bonds, because especially if they're doing like the tax bracket things. Like, I could probably find some ways that I could save a lot on tax, because taxes are the thing that always destroy my runs. There are also some ways I can get a little bit better at this game, but most of this series is based on RNG, where if rates could go very, very high, I could make a lot of bond purchases, or they could go very, very low and I don't make any. So, like, a lot of this strategy has to do with, like, RNG and luck. Because I was so lucky to get, like, almost 10% here and almost 13% here. Yeah, never sell a thing. I'm a big fan of that strategy in real life. Like, I usually just like to buy dividend stocks and then keep them for the dividends. And they're really great. But in this game, I usually like to just do bonds and... So we have a good 8 years until we're good. Okay, so now interest rates are about to go up. I think so. Oh, they fell. Okay. 400,000. Net gain. Where's the net gain? 420,000. And we got our last bond, which is right here. Okay. So now's the big question. Do I go ahead and wait for rates to fall a little bit lower and take out a short, or do I take out the short now? That's the big question. Oh, that was me being greedy. So let's go ahead and take out the short. This is a little bit dumb for me. So save. We have beat our strategy now. I don't understand bonds because I don't understand them too much. Yeah, they can be a little bit complicated to understand, but like I could go over like a bit of a minor crash course on how I pick these. Like for example, whenever I'm picking out long duration, I'll be like, for example, 2063 Canal Plus. You can see basically with this game, and sometimes real life too, you can see like that there's like something called the coupon, and there's something called the credit rating, and there's something called the yield to maturity. So if we look over here at the yield to maturity, so the coupon of this bond is 8.5%, and then you can see the yield to maturity is 6.96%. You might be asking like, why is the yield to maturity less than the coupon? Well, it's because if you do 8.50 and divide that by 115.86, you get about 7.3%. So that's almost about 6.9. So like that's like why, because the price is higher. So I generally like to do in this game is I like to buy below par, which is below 100. And so that way you make a little bit higher of a yield to maturity than the coupon. If you look over here, this is like a 0% yield. And you can also do convertible bonds and everything else. They're very, very complicated to understand though. But like, yeah. They're also limited gains, so it's probably better that you learn stocks and bonds, but once you have a lot of money under management, you could probably play around with bonds a little bit. I haven't played around with them all that much, and I have quite a lot under management, and I haven't bought a bond yet, but I mainly just want to expose myself to equities. But bonds are nice to have just as a little bit of a protection. Oh, you know the basics of bonds, but you don't. But don't show me a yield curve. Yeah. Like some of the my broker Scotia iTrade, I have them. Like they're very, very good. Like they show a yield curve, and then some of them show yield curves, but yeah, it's a little bit hard to tell about the yield curve. Right now, the yield curve should be upward sloping, where your short-term bonds pay you almost nothing, and your long-term bonds pay you a lot. So in my sense, it makes no sense for me to lock in 30 years at almost 2% interest. So like right now, bonds are just completely bad in my opinion, but they might become better in a little bit. Okay, we're gonna go ahead and take our short on our bond. So like this is what I do to make a little bit of extra income in the portfolio. I think this is one of the biggest reasons why I think I broke my record. 19,881,780,000 net worth. I usually like to divide this by 2. That way I limit my short. And I should buy puts maybe. I don't know if this is stupid or not. Fund investment strategy. I usually like to do the government bonds because they have a lower coupon. So because they have that lower coupon, they're a lot more price sensitive. So this ETF is likely going to get wrecked. So we're at $85 right now. If you look at the chart, they're at almost an all-time high, and it may continue to go up. Okay, I'm definitely going to take all that short. Buy or sell GMB, short. So now we want to short 9 million of this, divided by, what's the price? 86.16. I'm going to short 115,000 shares. About a $9 million short. So now we have a short on the government bond index. So if interest rates rise, we're going to make a lot of money off this potentially. So like this is how I basically bridged the gap and helped create more wealth for myself in this game than my 19 million of last time, because it's like a way of how you make a decent return. Like I think last time last time when rates were low, I did this, and I think I sold around here somewhere, or I got sold around 6 or 7, and I took home about 2.5 million. So I think it's a really, really decent strategy. Is just shorting. I was thinking to buy Speculator or Wall Street Raider when they released a new version. Which of them do you recommend? That's actually a pretty good question because personally, I like Wall Street Raider just because I can mess around with a lot of money and control the entire world to a certain extent. But if you like I own the corporation, I run and I call the shots, and you like more certainty, I would go for Wall Street Raider because when you do Wall Street Raider, you actually own the company that you manage, so you can decide on how you want to grow the company, how you want to spend money, and everything. Whereas with Speculator, I like Speculator because it's more realistic, where it's like you actually don't own a company. You're just going out there buying shares, etc. So like it really depends, but my personal opinion, I like Wall Street Raider a little bit more just because you can control a company and do everything. Whereas this, it's like this you can go through strategies and everything. Like that's one of the biggest reasons why I play Speculator is just to go over strategies. That's why I barely ever play Wall Street Raider on this channel because it's relatively straightforward. So I would say that this game is probably a little bit harder just because a lot of people don't know how to invest. And so like that's one of my whole objective around this channel is try to teach people or somewhat give them a way of how to play the game. So right now we took out that short on the government bond. So I'm hoping that rates rise, and if rates continue to rise, our short is going to do well. Only problem is we have a servicing cost with that because we took out a short. So we have to pay them interest. If rates stay low for a while, we're in a lot of trouble. Wall Street Raider is more like a business game, and Speculator is more like an investment game. Yes, that is correct. So Wall Street Raider is like where you run a company and you call the shots. You have more control. This game, you have a lot less control. Like one thing I like to do in Wall Street Raider, you can basically create a bank, and then you can do the strategy where you buy a lot of duration bonds, and you can make hundreds of billions of dollars, and your company can become so huge, and you can basically buy out any company you want, and you can control any company. Whereas with Speculator, I think the most I've ever made in this game was like a few billion. And I was able to I did that basically by doing naked calls. So it depends. Like if you want a bit more of a business simulation, I'll go for WSR. And if you want a bit more of a actual approach to invest in, I would go for this game, Speculator. Yeesh. Stupid rates are staying low. I got time. You know other games similar to like WSR or Speculator? Another game that I think is somewhat... What was that? I should really read things, man. Another game that's similar to that would be the Capitalist franchise. Not that. It's like Capitalism. It's more of a business simulation game, though. Like, you can get this game on, like, Steam. Like, you can get Capitalism on Steam. I've been thinking about covering this game on my channel. But personally, I just think of it... Like, I don't really like it as much. It's a lot more friendlier to beginners because it actually has graphics and stuff. Like, you can look at this, like, and... It's more of a bit... I would say that the business simulation on this is a little bit more realistic because you actually get to control prices and everything for your companies and stuff. But, like... like, this is narrative. Like, it's hard to explain. Like, Capitalism isn't a bad series to get into. Like, it was one of my first... was playing Capitalism. But, like, if you're looking for games that are very, very, very in-depth when it comes to financials and everything, I would say WSR or Speculator. I can't. I'm trying to look for games that are similar to these games, but I can't find any. I don't too much graphics. I want more investment oriented game. I don't like too much the graphics. So if you're looking for more of an investing game, I would probably just pick up Speculator because you can buy bonds, you can buy stock. Like a lot of the times in this game, I'll just play around with different strategies and everything. Like you can buy stock, like you can buy all these industries, and you can play around with like industries. Like you can specifically industry hop. Like I think that's one thing that my friend Raken does. Raken M. He's like a YouTuber who does this game too. Like he does mainly Wall Street Rare, but he industry hops. Like he will go into industry from industry. So you can invest in a lot of industries in this game. You can do bonds, you can do stock. Yeah. So like I don't like too much graphics. Yeah. Like if you're looking for more of a realistic investment experience, this game would be the way to go. And then also paper train in real life. Like if your brokerage or whatever offers basically what I call is paper train, where like you can set up like a fake money account. Well, that's what it is. SMCs were paying back their bonds. Yeah, like you can get like paper trades or something like stock. I don't know if this is available in Argentina though. That's the problem. But like you can get like practice, like invest in stock market simulations. So like you can set up like a fake account where basically you start off with like fake money, and you can actually do like this is actually real life stuff too. You can buy like Apple and everything. I think that would help a lot. Is if you had like a fake if you had like a fake account where you just play around with that for a bit. Yeah, I don't mind the graphics for Capitalism Lab 2 or Capitalism. It's just it's very, very simplistic. It's like all you can do in that game is buy stock, which is pretty good. But like it doesn't go into a lot of detail about like real stuff. Yeah, I know, but I know it sucks to hear that, but like I feel like once I don't quote me on this, but I think the creator of the game he's a one man army. He's the one who's programming this game, and I think it's I don't know if it's always what he does, but he's like a developer. Like I'm hoping that maybe someday they will add preferred shares, but that would make the game a lot harder to program and everything. Yeah, I know it sucks to have to pay for it every time there's an update, but I haven't updated this game in a while. Like I updated it. The most recent update I think I have is like the ETFs update where he added like new funds, like the ultra leverage bull one. Cause like there's like new ETFs that he added. There's only a few ETFs in this game when it first came out. No, like when I first started playing. But recently, I'm pretty sure they added the prudent government securities, the aggressive growth shares where there's triple leverage. So he adds a lot of stuff. It's just yeah, sometimes you have to pay for it, which is a little bit irritating for some people. I have version 2, I believe, of similar of Wall Street Rare because like it says right here V2. You have to pay. You have to pay for a new major update. I think for Wall Street Raiders a new update, but I haven't updated it yet. 9.0. Yeah, I don't think I have 9.0. Let me double check. Yeah, I have 9.020. And I think there's a new update, but I'm not gonna buy it at the moment. I was thinking about buying it maybe when I get paid. Speculator is 3.0. Huh. I might have 3.0 and I don't know about it. Ouch. This short is hurting me, man. Boo. Let's do it like a 1 million putt. Buy putt. You can also buy putts. Like, this is what I like to do. So right now, I think the ETF is trading at 100. So I'm gonna probably do $9, and then I'll do. I want about $2 million of exposure. This may destroy me, but doesn't matter. So I can have $20,000 of share exposure. Divide that by 100, 200. That cost me 196,000 premium. And I have about 200. I have 200 putts. 40,000 shares. No. 20,000 shares. I bought a putt for. So I'm really hoping that rates rise over the next few months. Yeah, my portfolio is in a lot of trouble right now. Ouch. This hurts, man. Oof. This is a lot of money for these putts. Thank goodness I think I only lose the premium, so it's like 170. This is me being a little bit reckless and me being a little bit desperate. 15 million in cash, about 11 million in liabilities. So let's just hope that rates rise. The latest, when they release the new version of WSR and Speculator, I'll see which I will buy. Probably is going to be the Speculator. Yeah, Speculator I really like. Yeah, I think you should try the demo version, definitely. Because I think you can play like 3 years or something throughout the game. And you can see if you really like the game. And, yeah. Try out some different strategies, you know? I really like that. I'm feeling the pain right now because the rates are very low right now. I would really like to sell bonds right now, but we don't have any bonds, I believe. Do we? Oh, we have SMC. I can sell this for 80,000. Why not? Eesh. We are in quite a bit of trouble. Come on, rates rise. Current government securities. Where you got to? Yeah, it's almost at an all-time high. Let's speed up. Don't have all night. It's like 11 o'clock where I'm at right now. You said, you said that you look for games similar to WCR or Speculator, but I don't think they exist. Yeah, personally, I'm having a lot of difficulty finding games like this. Like, I was searching for games that are like business simulations, but I couldn't find any that were like as complicated or as in depth as this one. Oh, I keep forgetting to update the days. It's 55. Like, capitalism, I would say, is the closest to this game. Yeesh, we just got charged a dividend. How's our short doing? We are currently down 1.8 million our short. Ouchies. But we have a positive net worth. But if we look at our stock portfolio, we have negative 10 million. So we are almost at we're like a slightly positive net worth right now. And betting over the long period that our putts are going to pay off. Hopefully our putts pay off. A game you should look like, it's City State. Oh, yeah. I think I've... This game does look pretty cool. It's like a political sandbox. Micronation from scratch. Damn, I might actually buy that game. Thanks, dude. Really appreciate it. I'll make sure to check it out when I'm done streaming. I don't know if you heard about it. No, I haven't. I have City Skylines. That's a pretty good game too. Okay, are putts paying off? Yes, they are. Okay, inflation's coming. Rates are rising. That's very, very good for our short and putt strategy. So right now we're still losing money off our short, sadly. But we have tons of cash. They make City State recently. It's very similar to City Skylines. Yeah, I have City Skylines. The graphics are amazing for that game. Yeah, the graphics are very, very good for City Skylines. I don't play it all that much though, because I think it's, I don't know. But you can choose the economic system. Oh, that's pretty interesting. Our putts are expiring, I think. Kind of wish I bought longer term putts, but we did okay with those putts so far. So I made a good few $100,000 off those putts. So the short is really going to be the thing that saves me. They're tightening rates, so that'll make rates go up, hopefully. $3.66. So we made a decent amount off those putts, but I don't think it helped with the profit. Because I think we paid like $100,000 for one of the putts that we bought, and we made like a good $300,000. So we made like a small profit off those putts. But like I think the short is going to be the thing that makes us the bank. Hopefully. But I don't. I think it can run CSA2. Yeah, I might give that game a try, especially if it's like $10 or something, or maybe one day I get like a little bit more money for my dividends. I'll go and buy the game and see if I like it. Are you done your accounting, or are you just? Okay, GDP went negative, so I'm gonna go ahead and cover my short for $2 million. So that's why I do my shorts. I made a good $2 million doing that, but I don't know whether or not it was beneficial because I had $18 million. We did okay with that transaction. Okay, I'm gonna go and buy up a lot of. What? No, I don't want to do that. $10 million purchases of government lawn bonds. Oh, we still have $8 million. So I'm gonna play a bit of balanced right now. So I'm gonna keep a lot of cash right now, but I'm also gonna keep a lot of bonds because right now I see a negative GDP of 4.7. So that screams to me that there's gonna be probably a recession happen. So rates are gonna fall. So hence why I'm playing it quite safe with these government bond purchases. And if rates decide to go up, I have $8 million in cash to play with. I'm looking for a good game PC for gaming. I'm studying for it. I didn't finish yet. Okay, yeah, I get that. I'm also studying too. Like I'm currently in my final year of my program. So I'm excited to graduate and eventually get a good job maybe, and then continue working. Yeah, what kind of accounting are you thinking about getting into? Like corporate accounting, or are you thinking more small business accounting? Or I don't know much about accounting degrees, like what kind of jobs you can get in the industry, but I know there's a lot of options you can do. Because like it's a very, very flexible degree. It's actually one of the better. It's actually one of the best degrees I think you can get. It's very, very flexible. Kind of wish I bought more bonds. It's like rates right now are falling. Jeez, I have 6 more years of this game left. 2 million. $3.5 million profit. I mean, in Argentina, I think most of the accountants are like tax advisors for individuals and small companies. Yeah, I remember doing a bit of tax. Like I had a very, very in-depth tax course, which was like CPA, Chartered Professional Accountant or something. He was like, and like that was like something that I was not very, very interested in doing. Like very, very complex tax stuff. It's like, oh hey, if you get this automobile, you can. I don't know. I just didn't really like it as that much. It was a little bit too complicated. You can work in an accounting firm to advise people or companies. Yeah, I would personally be very, very interested in consultant. Like that's one thing I'm thinking about maybe doing is consultant or something. Because I really, really like. Okay, rates right now are ridiculously low again, which is great for. Hopefully, GDP is still negative though, but it's having a bit of a V recovery. I'm thinking about shorting. Don't learn from my mistakes. Right now we're at net worth of 22 million. $11 million in shorts. I made it hard to see, my bad. 11 million in shorts divided by 29.50. So I'm gonna short that many stock. How much? Yeah, it's up quite high lately. $10 million, almost $11 million in shorts. Okay, let's go. Hopefully GDP recovers and I'm actually able to make a profit off these bond shorts. Where did we short at? We shorted at 30.51. Oh no, 29.27. So if it falls below 27, we're happy. I want to do some puts for GMB. Options by put. In order you can work in accounting. I want to get into something related to finance / investing. Yeah, I always find that investing is very, very interesting. I've always been interested in investing ever since I was like little. $645 shares. Let's do 700. That cost me 217,000. I just figured out that the latest major version of the Speculator was 3.0 was released last month. Damn, I should re-get it. What kind of update? Well, like, if you don't mind me asking, because like I haven't really kept up to date with it, but like, have they added anything that's interesting that I think will be interesting? Didn't even know they had a new update. Oh, they had crypto? What the heck? That's pretty awesome. Yeah, that would be that'd be very, very interesting if they did add crypto. Because like I would be generally interested in how volatile it would be. Because like I know in real life cryptocurrency is ridiculously volatile, but it's also pretty interesting. I just recently bought some crypto, like during the Evergrande crisis when everyone was afraid, and so I made a decent amount of capital gains off that so far. 500K, 2 million. Oh yeah, I'm so glad about those putts and did the short. Yeah, I might have to check into getting that update because I feel like that would be a very cool thing because then I can create like a bit of a crypto portfolio and see what happens. Because what I'm trying to do is I'm trying to create like a challenge series where I mess around with everything in this game. Okay, time to get out my short. So we made a good 2.7 million off that short. We want to buy back the stock. Close our short. We closed our short $2.6 million gain. And then we have our put. About $500,000 gain. Let's go ahead and cover our put. So we're going to sell a put. We're going to cover it. We'll make about 370,000. Not bad. That's a $2 million put that we just did. Next major update is going to be in a year. Yeah, I think he does yearly updates. That's pretty awesome. It's definitely a good idea that he did crypto as a thing. Okay, we're gonna do some crypto. We're gonna do about 3 million in long-term bonds, because that's what we just made off those sale of things. Triple B. What's the current year? I want to know the current year. Current year is 2047. 2066, 2067. Triple B. I want to see the price. $2,500. I don't know the. I read if you don't pay for the next update in a certain time, then you have to pay full price. Like if you never bought the game. Damn, that's rough. I don't know the exact time for that. You can skip the updates. Sorry, my English is not very good. It's no worries. I suck at a lot of things, but it's good that you're like learning English and everything. I want to try to learn more languages myself, just because I feel like it's a good asset to learn. Because if you can get ideas from other people, it's a very good idea. It's probably better to put over there. My calculator. Oh, so stupid, man. I keep putting this thing on like a very, very high speed, and I'm like, oh, everything's gonna be okay. You're just gonna buy a bunch of bonds and do okay. I always miss out on like. Boo, that sucks. Yeah, it's okay. We beat our record so far. Let's just buy up some ETFs. Why not? 2 million each, I guess. Are they cheap now? A little bit more expensive. I learned English at primary school, high school. The last 2 years, I learned French. Yeah, I think I learned French English, which was pretty interesting to like learn. I kind of regret not doing my French. I did a bit of French, but then I was able to. I didn't really do it during high school, sadly, and so I kind of regret that to this day because I don't know. Also, didn't want to stress myself out too much. Okay, we're gonna go and do the short. How much money do you have? We have 24 million. I could potentially make even more money if I maxed out my leverage on shorts, but I'm not going to do that because that is kind of big level dumbness because I don't have much margin for error. Yep, so high. $11 million, $12 million, almost to short it. Cool. Okay, hopefully rates rise fast because GDP is very, very high right now. So I'm thinking partially because. No, now we do puts because rates are very, very, very low. Buy put, trade, buy put. $30 a share. Let's do it $3. 314 premium. 318 premium. And then I want to probably put like 5 million. Oh, 5 by 100. 55. Oh, let's just do 100 putts. Right, 100 putts. 3,000. 32,000. Probably do the putt math wrong, honestly. Whatever. How many putts do I own now? I own a good 1,000 shares. Oh, okay. That's probably not much. Buy put. $31 a share. 308. $1,500 contracts. 150,000 shares times $31 a share. 4.6 million. That's more of what I'm talking about. Okay, that's enough leverage for now. Okay, hopefully rates rise fast. I think WSR will get a major update soon because the current version 9.0 was released January 2021. Yeah, it may have a new update soon. I'm not too sure. I haven't talked to the developer in a while. I think I found his business email or someone gave it to me. chatting with him, asking him, hey, can you add preferred shares? Because I'm a big fan of them in real life. Like, I would like it if the developer had, like, floating rate preferred shares, like a way to make money if rates rise, like a floating rate security. I think that would be cool, because if I think right now rates are very low, the floating rates won't pay very much, but if rates are very high, the floating rates will pay a lot. I think that would be pretty interesting if they had, like, a floating rate security. Or if they had, like, I'm thinking, like, if they had, like, more interesting things, like, right now I think the only credits I can buy in this game on Speculator is the only thing I can buy in this game is bonds. Like, I cannot invest in credit card debt. I cannot invest in anything else. But in Wall Street Rare, you can do credit cards, you can do mortgages, everything else. Like, if you're doing banking. So, like, I would like it if they had, like, a more ETFs that have, like, for example, like, there would be, like, a mortgage fund where, like, you can invest in mortgages. I don't know if that would be very, very good, though, but it's just some ideas that I'm coming up with. Like, one where you do credit cards, or like, I just want to come up with, like, more floating rate debt will be pretty cool to add. Look at this. This is the most insane I've ever seen. Wheat and corn are very ridiculously high levels right now. So that's likely going to lead inflation higher. And so my shorts are going to probably likely do very, very well. Hopefully. Or maybe that's why they're keeping the rates low. I would like to know if I pay the game as US dollars or pesos. I am pretty certain that's in US dollars, because I'm Canadian and I personally had to, like, convert to USD, and it personally hurt a lot to pay for the game, because I think for me it was like 50 CAD or something for, I think, Speculator and Wall Street Raider. It's a pretty expensive game, but it's like, in my opinion, it's a pretty good investment just because it helps. It's a little bit expensive though for me. But I think if you have a copy of the game, you can, like, email the developer and you can get, like, a discount for on another copy, because if you own a copy, you can get, like, a discount on things. I'm pretty sure. Rates are probably going to go back down. Boo boo. Yeah, I'm pretty sure you gotta pay US dollars for the game, sadly. Yeah, that makes sense. I'm just saying, like, if you think about buying Wall Street Raider, I'm thinking if you get Wall Street Raider or Speculator, you can email, like, the creator your ID, and then you can be able to get, like, a discount on the game. I don't know how much you get, but, like, I'm pretty sure it's a good discount. It's worthwhile. Ugh, this hurts, man. Why does rates have to fall? Ouch. Where options are technically worthless now. Come on, raise rates, please. Come on. Let's go, please. Please raise rates. Please. No, don't go more aggressive in London. Bro, I want... Damn, this sucks. This really sucks for me. Freaking rates decide to crash. I was thinking that they would go up. So I guess, like, I didn't have much. I still have some room for error, but not a lot. Thankfully, I didn't max out on leverage, because we're paying out a decent amount of dividends. Where's our cash flow? Our cash flow is 20 million. Add current cash balance. So we're losing about $300,000 a year, quarter, I believe, or a year. Oh, there we go. Big inflation. Let's go. Do we still have our putt? Yes, we do. Or one putt. And we still got our stock. Yeah, our government securities is crashing in price. That's good. Hopefully it continues to crash and we're actually able to make more. It's almost the end of the year, so sadly I'm not going to be able to outperform all that much from last season. But we're doing alright. What is wrong with the economy, man? Freaking hyperinflation. Now it's negative GDP growth, and now we're gonna go back into another recession again. Yippee! I never bought. Oh yeah, I already read that. Hopefully, I can beat my record because I think last time I had a record of around 19 million. So I was hoping to beat that by a lot. But as you can tell, interest rates have been kind of flat like last year. So like my short and my putt haven't worked out as well as I thought they would be. It's no biggie. Got time to wait. Still got about an extra 3 years almost. If you have WSR, you can buy the speculator. Yeah, like that's actually a really good price, $9.95 USD, I think. I forgot that there was I like originally when I first bought this game, like a few years ago, around 2019, I didn't realize that you could get a discount if you already had a copy. So I had to pay full. I paid full price for both of them. I was like, ugh. You bought you can buy both for $30. Yeah, I think I paid a lot more just because I didn't realize that there was a discount. Yeah, so it's probably 30 USD, I would assume, because the creator is from USA. Okay, we still have our short, about $1 million in gains, but it's probably not worth it. Unless rates rise up high. Look how stable my portfolio is. Freaking barely ever goes up or down. Freaking stable, man. $1.9 million. I kind of wish interest rates got crazy like this right now. When my putts were in place, but I guess that's okay. You win some, you lose some. At least the short, I can decide when I want to exit. So right now around the 6% rate, I might want to consider exiting. Right now I made about 2.3 mil. But I don't think it's worth that because I just pay a lot of dividends for a certain period of time. But like GDP is negative. Yeah, like this is a very, very high increase, and it looks like it's about to fall right down. Or at least it's slowing down for a little bit. It might go back up again. Oh! And there's also, like, one thing I forgot to bring up in this game is that there's also specific situations that happen. Like, I think last episode I bumped into, like, the Great Recession Part 2. And so I predicted that a recession was going to happen because of subprime mortgages. I made quite a bit of money doing that. Robots have taken over the industry. Human workers becoming super flavolous. Robotics have become the world's largest industry, almost fully automatic, and using robots to build things. Large and small robots function from piloted jetliners to etc. Not surprising, however, the huge increase in robot production and utilization is providing a strong growth component to electronics and computer software, etc. Replacing cab drivers. Yeah, like there's occasionally like new economic things that happen in this game that I really like. Like we get to play around with what if the world gets completely almost replaced for robots. I think interest rates will likely crash. Because that would make, and just because of that, I'm gonna go ahead and scale my trade. We made 2.2 million, not bad. Because of the yeah, so like rates are about to fall right now, so I would probably buy a little bit of bonds, maybe a good 5 million. Because I still want to take advantage of this interest rate fall. There you go. That way I lock in some gains if interest rates do fall. And we're gonna go ahead and buy up some more. I'm gonna buy up long duration. Ooh, triple C is at 13, but that's ridiculously low. Yeah, we're gonna make like an insanely high coupon off this, like 10%. So it makes sense to buy some right now. I want to make sure I beat my record by quite a big margin instead of being close to like 19 million. So like, that's why I'm being a little bit aggressive with my bond buying. I could be way more aggressive though. If I borrowed money there, I would easily beat my record. But right now we're doing okay. Trying to beat my record. We have 2 more years until it's over. Okay, let's do some bond iron. It's about time. So it's currently 2050. And so now we're going to do a 2-year bond ladder, and then we're going to be done the game. 2053. And 2050. Oh, you went to the bathroom? Well, I just bought a lot of long-term bonds at like a decently high interest rate, so I made like a good maybe 1 or 2 million, or like I almost made 4 million off it right now. Right now, I'm just wrapping up the game because we have 2 more years left. So I was thinking about selling this bond that we bought right here for 5 million, and then go ahead and work on some laddering right now for the time being, because if you think about it, I want to avoid long duration bonds because it's currently 2050 and the game ends in 2 years. So we're gonna do a bit of laddering right now, where I'm just gonna buy up some 2050 bonds, some 2051s, some 2050s. Oh, Tesla Motors, why not? Do you have some spreadsheets for investing or for budgeting? Yeah, I usually use most of the time I use like Google Sheets, which is pretty helpful because I'm a big fan of like the stock feature because you can get like specific companies and tickers. I can show you that in a little bit. I can show you my personal portfolio if you wouldn't mind. 1041. Okay, that's enough laddering for now. Right, we have some ladders. We have 2066 is our longest duration. I'm gonna go get all that. $500,000 in gains, $16 million in cash, $9 million in bonds, 2051, 2052, 2052. Cool. So sadly, I think our bonds might mature during a bad time. So like that's gonna potentially screw over about 5 or 7 million of my money. Yeah. I wouldn't mind showing you. Like I personally try to keep some of it. Like I try to keep my. Like I mean, I don't mind showing my investments, but like my personal expenses and stuff, it's a lot because like I do spend a lot as a student. But I'm okay with showing you some of my investments and my rationale. Okay, where's my record? I'm pretty sure I got 19 million last game. Pretty sure. Yeah, I got 19 million last game. Damn. Yeah, I might have to try out some new strategies next time. Maybe buy more convertibles or something. Because right now we're doing okay. But I cannot breach the 30 million mark. I thought I was going to reach 100 million, but that's relatively unrealistic. Unless I'm doing more equities. Because our portfolio hasn't really grown all that much. Lately, at least. Or unless I'm going to take out a lot more risk and be able to like take out like loans and stuff. Then I would be able to do much better if I took out loans, but we risk losing the game. Yeah, I think right now I'm a big fan of oil stocks just because oil prices are so high that like a lot of these companies are free cash flowing like crazy, and they're able to like reinvest into like the growing their company and everything. But that's just my personal opinion. I could be wrong because like if oil prices do fall, then that's really gonna hurt a lot of oil companies. But right now, Suncor is reporting a lot of money. So I'm a big fan of oil companies right now, personally. Could have potentially shorted the bond and made a little bit extra, but I didn't want to risk it because we're so close to retirement. It's literally 1 year away. I shouldn't have bought so much 2052 bonds, but it's no biggie. We have a 2052 bonds that we could sell right now. I'm trying to keep a lot of cash though right now, which sucks, but rather keep cash than lose my record. Like we're pretty close to being we're a few million off of our record, which is nice, which is 19 million I believe. So we're at 26 million, which is pretty good. Don't need them at the moment. I would love if you interface. I would love if the interface of the game will be more modern. Yeah, I feel like it's a little bit complicated for beginners to understand the interface, but I think it's relatively straightforward if you had, like, if you... it just takes a bit of time to get used to. But yeah, it could be a little bit more modernized, but I have no idea on, like, how to make suggestions to make it more user-friendly. Because I'm not much of a developer myself. I usually just come out with, like... The best I can come out with is gameplay ideas. Like, hey, I prefer chairs. It's now March. Almost over. Damn, our portfolio is basically been flat. Makes sense because we're keeping a lot of cash. Trying to lock in my W's. 18 million in cash. June. How much coupons are we making? 500,000. Not bad. 25 million at the end of the year. So we're gonna beat our record by like about 6 million, which is quite a bit. And also, I didn't use as much leverage this game. Like, I took out a lot of leverage like last game in order to make a lot of money. I don't think I used as much leverage. So I think my strats are becoming a little bit more reliable, especially with like the whole idea of short bonds. Short bonds are a great idea in this game. Definitely bond only is fun because nobody thinks about just buying bonds only. And I like the strategies and everything. It's common shares. It's like I can get rich very, very quick just doing that. But I could go over some strategies like on how to value companies and everything. I would like to probably maybe create a challenge where I only do one industry only, where I can just do only biotech or only software or only high-tech growth companies. And then I can mess around a bit with bonds, but have mostly the portfolio in growth. I think that might be a good idea for a series in the future. It's just October. We are a bit in bonds right now. Small losses on that, but it's no biggie. It's going to mature in 2052. Okay, game is almost over. This game definitely does take a few hours to beat though, because I think I have 2 streams where I've been streaming for about 2 hours or 3 hours trying to beat this game. So it's a good 9 hours of gameplay or a good 10 hours of gameplay. And I'm playing on like one of the fastest speeds. I can play at 100 ticker speed, and that's going to be like going by very, very, very fast. But I usually like 90, 95 because I don't want to make it too fast. Oh damn, look at these. What happened here? I'm in Ontario. Ontario's not bad. It's I think we're handling COVID pretty well. Oh, game over. Okay. Nice. So we beat the game. Hopefully we beat the bots. Okay, congratulations. Canadian investor has a new record. It's 26,757,000. So if you look at my fixed income only challenge, where is it? Yeah, my mic quality is very, very quiet. I'm probably being too quiet. Okay, so if we do a bit of math, we can check how much I beat my record by. So right now, our record is 26 million. 26,757,401 subtracted by our old record of, what was it, 19 million. 19, what is that? It looks like 880, right? Yeah, 880766. 880766. So we beat our record by about 6.876 million. So we almost beat it by 7 million. So like that's definitely a little bit of an improvement when it comes to fixed income. Cool. That's good to know. So we beat our record. Here's the end of the game. So I beat my record by about 7 million almost. Okay, so player 2, who am I? I'm Canadian investor. I'm player 2. So I had about $18 million in cash. I think the closest person had about 3 million. Ones, tens, hundreds, thousands, 10,000s, 100,000s, millions, 10 million. Yeah, so the closest person was player 1 to beating me. He had a net worth of 6.15 million. A net worth 6.15 for Warren Buffett. He had a credit rating of AAA. Had a Commerce Bank AG, 3 stocks owned. He's a bank analyst. I was worth 26 million. AAA. My favorite holding was the High Income Bond Fund. And we owned the High Income Bond Fund, which is that, and we owned the Blue Chip Bond Index, and we're a millionaire investor. Carl Icahn owned a lot of companies. He's the astute investor, I believe. Cautious stock trader, got 3 million. Didn't own any stocks. World Energy Fund. So yeah, we beat the robots. Freaking, this guy's contrarian. Yeah. So that's interesting to know that I just beat my record by 7 million, and we easily beat all the bots just by doing bonds only. I'm wondering what happens if I just do stocks. I'm thinking that would be a lot better. So that was a pretty cool game. I feel like I have to refine on some strategies and maybe take a little bit more risk in order to get to where I'm at right now. But I feel like, yeah, that's probably going to be it for bond only for now. Like, I'm glad I got that series over, and I'm probably gonna start working on maybe some other series too. You want to see my sheet, so I can show you it real quick. It's my own personal finances and everything. Get rid of that. Get rid of that. So here's like my personal finances and everything, and like what I'm personally trying to do. It's like I have some income from dividends. Like I want to try to increase like my dividend income. But like, you gotta start it seems like a lot. This is because like most of my money came from an inheritance. Because like, I haven't told the channel this before, but during 2019, about 2 years ago, my mom passed away. So I got a bit of money from her because, yeah, she died of cancer, which was sad. But I've just been trying to grow my money as much as possible. And it's also nice. So I'm thinking that sometime in the future I'll have to supplement my income because I don't have my mom around anymore. So I've just been trying to invest as much as possible and try to grow my wealth as much as possible. I just want to see the kind of spreadsheet style you use. Oh, okay. I made my own spreadsheet style. So like I this was all a blank workbook. Yeah, it's no problem. I'm just trying to cope with this stuff. YouTube has definitely helped a lot with that stuff, just because I get to talk about what I'm interested in, talk about what I'm passionate about, help spread good news and everything. I didn't really use I didn't really use a template though for it. I could use I think Andrew Jack has one like. What? Oh god, I have like 50 tabs open. Just making sure I know what to share. Pretty sure you can do this. And then you can go to like description, Patreon, no. It's like huh. Buy now. What? Oh, okay. I'm pretty sure like that like you can look at like some potential ones. I personally started off mine as like a blank canvas and I just worked off of that. But like I'm pretty sure there are some YouTubers that have like a way of doing it. Like one that I actually did a while back was like yeah, I think this is one that I watched a while back. Is he just starts like with like a blank canvas and then he makes like an entire stock spreadsheet of it. What else is there? I forgot which one I used exactly. I guess this one I used. Yeah, there are some videos about it though, like that actually. Spreadsheets. Yeah. I'm glad you can. I'm glad you keep them busy. Yeah, I'm trying to keep as much busy as possibly. Is there a free portfolio tracker? Isn't there? Yeah, you can like, I believe with Yahoo Finance, you can actually make an account. Like for example, you could just make your own tracker. Like I personally try to avoid using my tracker as much as possible, just because like if you're a long-term investor, you want to generally try to avoid seeing your tracker almost daily. So like a lot of the times, whenever I buy a stock, I'll write down like on my sheet of paper what price I paid for it, and then whenever I want the exact price, I'll just do, for example, APL, for example, for Apple, and then I'll look at the exact price and I'll just do that. But I believe if you get Yahoo Finance, and if you set up like an account with them, like if you make an account with them, I don't want to sign in at the moment, but you can track your thing relatively easy, and Yahoo Finance is like a very very good thing for any research generally. I use Yahoo Finance almost every day just to like track my portfolio and track everything, just because they got good statistics. Like for example, you can look at Apple right now, forward P of 27. You can see like the revenue of the company, their earnings, etc. So I'm personally a big fan of just Yahoo Finance. I think you can also do it through Google Finance too, but I'm not sure because I barely use it. Nice, thank you. I was looking one of your investments and other. Oh, you're referring to the link of Andre? I don't know where I got it from. I'm pretty sure he might have a way of getting it for free, but I'm not too sure. He might have to become a Patreon, sadly. He might have closed that link and then just made a Patreon link. So I might have to pay for it. Nice, thank you. I was looking one for investing and other for my expenses. Yeah. Another one that I like is I think Thomas Frank has one. Like Thomas Frank has one for expenses. So like if you want something like in depth, like this is one that I would probably do because like you can make some slight adjustments to it. Like for example, like if you're looking at like housing, you can like look at like your house cost and everything. I don't think they do portfolios though, but this would be very very helpful for like your budgeting potentially. Yeah, I think this one would be a pretty good one for your budgeting, like your expenses and everything. Uh, Please don't tell me I have to pay for it. Nope. So like you can like tools, you can see like federal tax and stuff. You might have to make a few adjustments to it, but like you can go ahead and like file, and then you can like make a copy, and then you can add that, and then like this might be a pretty good one to use. It's like I just googled on Google like Thomas Frank budget spreadsheet, and then I just clicked on like this. He has a website, and you can just like get it there, and then you can get like the a spreadsheet for like total expenses and everything. You can do like taxable stuff. I really need to start making a spreadsheet like this, but I've just been kind of busy with other things. Kind of sad with that. Tax brackets. I don't know of any good finance spreadsheets, honestly. Like, if I go probably to Excel. Or not blank workbook. I want file, open. I would check it out. Thanks for taking the time and showing me. No worries, my dude. I hope you have a good one. It's getting kind of late for me. It's like 12 p.m. for me, so I think it's about time I head to bed. Thank you very much for watching, by the way. I really appreciate it. I'm probably going to continue making videos sometime in the future, just because I really want to continue this YouTube thing. I hope you have a good night, my dude. I'm sorry if I have trouble pronouncing it, but have a good one, Franco. Have a good one, my dude. Okay, I'm gonna end stream. I'll talk to you later, my dude. Thank you very much for watching. Bye.